name of the new chapter which we are going to start. Set off, comma, carry forward and then set off. Okay, set off, then carry forward and set off. Both the things are not same, both the things are different. Set off, for this there is section 70 and 71, but for carry forward and set off there are different sections: 71B, 72, 73, 73A, 74, 74A. These sections are there. See, whenever you will calculate the loss for the first time, its set off will happen as per section 70 and 71. And if after applying the provisions of 70 and 71 the loss cannot be set off in that year, the year in which they are calculated for the first time, then you get the option to carry forward the loss, so that the loss can be carried forward to subsequent year, and in the subsequent year's income it is set off. Yes or no, sir? So first thing which we are supposed to do, that for any previous year, whenever we are making the calculations, the result of that calculation, for example, is a loss. So that loss in that same previous year we have to set off, either within the same head or from other heads' income. If that is not taking place in this year, if we cannot adjust the losses in this year, then there is an option to carry forward the losses to subsequent years and to set it off. Section 70 talks about inter-source adjustment, inter-source set off. Section 71 talks about inter-head adjustment, inter-head set off. If both these sections fail, then carry forward to subsequent year and set off from subsequent year's income. Loss of house property, normal business loss, speculation business loss, specified business loss, capital losses, short term as well as long term, and loss from an activity of owning and maintaining racehorse. These losses you can carry forward. Now see, first of all you will have to understand the difference between the source of income and the head of income. These two things are different. From the day one I have been screaming that how many sources of income are there, how many heads are there. So that time we were taking it very lightly. This head, you will not understand anything if you don't know the difference between the source and the head of income. See, how many heads of income are there? Come on, tell me. 5 heads of income are there, no? This is your one head of income. Second head of income. This is your third head of income. This is your fourth head of income. And this is your fifth head of income. Okay, no? So 5 heads of income are there. Tell me the name of all the heads. Number one. Salary, house property, business or profession, capital gain, and this is other sources. In all the heads, what we do? Few sources of income we classify in first head. Few sources of income we classify in the second. Few in the third. Okay. So for example, there is employment in one company, employment in second company, employer-employee relationship during the previous year, how many employer-employee relationships you had during the previous year. How many employments you had during the previous year. From all those employer-employee relationships, from all those employments, whatever income you are deriving, that income will be classified under the head salary. So under the head salary, there are two sources of income, two employments, two employer-employee relationships during the previous year, from which whatever income I was earning, I have charged that income under the head salary. So can I say under the head house property, H1, H2, H3, I had three house properties. All these three house properties are my three sources of income classified under one head. Then from business or profession, business 1, business 2, business 3, business 4. Some business will be speculation business, some business will be specified business, some business will be normal business. So all those businesses are what? All those businesses are sources of incomes. All those house properties are what? Sources of incomes. All those employments are, employer-employee relationships are source of income. Under the head capital gain, there is one long-term capital asset, 1. There is one short-term capital asset, 1. There is long-term capital asset, 2. There is short-term capital asset, 2. There are 4 capital assets. 2 are short term, 2 are long term, which I am transferring in this year. Giving me what? Short term gain, long term gain. Short term loss, long term loss. Yes or no? Then I will have source 1, source 2, source 3, source 4, source 5, source 6, source 7, source 8. All these 8 sources of incomes are there in other sources. Dividend from a company, then interest on fixed deposits, rent of plant machinery furniture, rent from subletting the property, yes or no? Winnings. There will be many sources under the head IFRS. Now these were my sources of income during the previous year from which I was earning the income. I classified all these sources into 5 heads. Correct places I classified. Now from these sources, whatever income I will earn, those incomes I will have to show under the particular head under which the source is classified. Now from the income of that source, I am getting what? Deduction also under that head. For example, if we talk about house property head, I have 3 sources of income, 3 house properties. House property 1, house property 2, house property 3. What will be the income of house property 1, house property 2, house property 3, which will be taxable here? Annual value. So for every house property, I will calculate the annual value separately. Then from the annual value of every property, I'll get deduction under section 24. 24 clause A, 24 clause B, 24 clause A, 24 clause B, 24 clause A, 24 clause B. From each property's annual value, I will calculate. So what will happen now? That the income of some source of income was less and the amount of deduction was more. So as a result of that, that source of income is not having a positive income. That source of income is having a balance income, which is a negative income. And when the negative income will come, whenever the deductions from income for any source of income, whenever the deduction is higher than the income of that source taxable under a particular head, yes or no? That time there will be a loss. So first time the loss is calculated at source level. Which level? Source level. Under a particular head, if there is a source of income, for that source, the first time the loss is calculated. Loss will be calculated for the first time for one house property. Then that loss will become house property head loss. Then that will be carried forward. Business 1, business 2, business 3. For one business, the loss will be calculated. So loss is calculated for the first time for a particular business, for a particular source of income. When there will be a loss, the deductions available from the business income is more as compared to the taxable income of that business, yes or no, then whatever remains will not be positive income, it will be a negative income. And that negative income is, my dear friends, what? Loss. Loss you calculated for the first time at source level for a particular business. Then under the head other sources, under the head capital gains, whenever the deductions exceed the taxable income of a particular source, yes or no, that time only the loss will be calculated. So can I say loss would be computed for the first time at source level under any head. So under any head for a particular source, the loss will be first determined. And when this loss will be there, come on, tell me. Loss will arise when taxable income of any source of income is less than deductions available from such income. This will result into what? Loss. Okay. Now tell me, when Amma Appa both fights, neighbors come or they resolve themselves? First they resolve themselves, no? So Amma and Appa will fight, meaning inside the house only the loss will be set off first. If the fight is big, then only the relatives will come. Then only inter-head will happen. Other relatives. And fight cannot be resolved through relatives, then forget it. We'll see later. Hello? Carry forward. So that same process we have to apply here. First, the loss calculated at source level under a particular head will be adjusted within the same head from the income of other source. Yes or no? So under house property head, if there is a loss of one house property, first that loss will be set off within the house property head only from income of any other house property. If there is a loss of any business under the PGBP head, that loss will be calculated, that loss will be set off against the profit or the positive income of any other business under the same PGBP head. If there is a loss, capital loss by transferring a capital asset, then that capital loss will be first adjusted within the same head, capital gain, against the capital gain of any other asset. Yes or no? Likewise, for every head, whenever there is a loss for a source of income, that loss will be first adjusted within the same head against the positive income of any other source of income. Yes or no? So that is known as what? That is known as inter-source adjustment, inter-source set-off. Okay, so whenever the loss is computed for the first time at source level under any head, this is the reason why the loss happens. Yes or no? Now, loss from any source of income shall be first set off against profit, or you can say positive income of any other source of income under the same head. This is the provisions of section 70, known as what? Inter source adjustment. We call it inter source adjustment. Source to source set off within the same head. Can you adjust the entire loss in the same head? Yes, possible. But for that, the positive income of other source of income should be more. What if there is no other source of income? Under the same head, there is a loss of any source, but any other source is not there only. No other source is there. Or any other source is there, but its income is not sufficient. Its income is less. So the entire loss could not be adjusted. Still, there is some loss which remains. Now what will happen? That loss within the same head could not be adjusted. Why? Because there was sufficient profit in the head? No, there was no sufficient profits available in the head for any other source of income. Yes or no? There is no other source of income, sir. Under a particular head, there is no other source giving me positive income. No source only other than this. This source is giving me loss only. House property 1 only. No house property 2, no house property 3, sir. Only house property 1. And that was SOP giving me a loss, sir. What should I do? Do you have any other property? No. So the loss could not be adjusted within the same head. No. That loss will become the loss of this head now. Now this loss will be loss of house property head. What if house property 2 was there? House property 1 was having a loss 5 lakh rupees, 1,50,000, and house property 2 is having a positive income of 1 lakh. Can you adjust the entire 1,50,000 loss? Or 50,000 will still remain? 50,000 will still remain, no? That 50,000 which could not be adjusted within the same head now will now become the loss of the head. Yes or no? Now that loss will now be adjusted. Loss of a particular head will now be adjusted against the profit or positive income of other heads. That is known as inter-head set-off. You are going to do that only if this step fails. You don't have a right to set off the loss against other heads. If the loss can be adjusted within the head, adjust it within the head. Okay? And if it cannot be adjusted within the head, only then you have the, right to carry forward, to set off the loss against other heads of income. So, first what you will do? Inter source adjustment. There are certain exceptions also. Subject to certain exceptions. Those we are going to see. Okay, now what are the exceptions? Now, if the loss could not be adjusted, if loss from any source of income could not be adjusted or set off within the same head. Because as there was no other source of income under that head, or such other source of income was having lower positive income, then such loss becomes the loss of that head, becomes the loss of that head, and can be set off against profit or positive income of other heads of income. This is your section number 71. So just like section 70, this is 71, which talks about inter-head adjustment. 71 talks about this. Okay, now. So what will you call this, friends? 71. This is your inter-head adjustment. This was inter-source adjustment. This was inter-head adjustment. Now, while doing the inter-head adjustment, there are certain restrictions. So this will be given subject to certain exceptions. What are the exceptions for inter-head adjustment? Those we are going to see. What are the exceptions to inter-source adjustment? Those also we are going to see. Yes or no? Now pay attention. What if the loss could not be adjusted against other heads also? Why? Because, sir, there was no other head of income only, sir. Sir, there was other head of income, but the income was less as compared to the loss. Possible, not possible? Or, sir, there was a loss of a particular head, but there was a restriction because of that. The loss could not be adjusted against that head of income. Possible? So there is no other head of income, or there is other head of income, hello, but not having enough profits, not having enough positive income to adjust this loss. In that case, what will happen, sir? The loss will now cannot be adjusted within the same year, not within the head also, not against other heads also. Then only you will get the right to carry forward. Then only the carry forward option will be given. See, if this year's losses are sufficient, this year's incomes are sufficient to absorb this year's losses, yes or no, then the losses must be adjusted in this year only. You don't have any other right to carry forward the loss. For example, you are having a house property loss of 1,50,000 and you are having a salary of 5 lakh rupees. So do you have enough income this year? Yes. Set off the loss in this year. You don't have the option. You cannot say, no, I don't want to set off my losses in this year. I want to carry forward in the next year. See, your salary income was 2,50,000 only. Only 2,50,000. 50,000 standard deduction also you got. So your taxable salary is now 2 lakh. And your house property loss is how much? Example, it is 1,50,000. So if 1,50,000 can be adjusted against 2 lakh, 2 lakh is there. So set it off, no? What you are saying? You are saying no. Even if I don't set off my loss in this year, still my salary income is below my basic exemption limit. I am not going to pay any tax. So why to waste my loss by setting off this income on which I am not supposed to pay any tax? Yes or no? So instead of setting off my loss of house property this year, I will carry forward in the next year. Next year my income is supposed to be higher. So from next year's income, I will set it off. Do you have such option? No. If there are enough profits, there are enough incomes during the current year against which you can set off your losses of the current year, you have to set off the losses in the current year itself. Carry forward option is not available. Carry forward option will be available only if the current year losses cannot be adjusted due to non-availability of incomes. Yes or no? There are no eligible incomes against which now these losses can be set off. Then only the option to carry forward arises. Yes or no, sir? So now the third step. If even after applying the provisions of section 70 and 71, the losses could not be adjusted in the same previous year, then such losses has to be carried forward. Then only such losses can be carried forward to subsequent years as per 71B, 72, 73, 73A, 74 and 74A. Done, sir? So first what you will do? Come on, tell me. See here. First you will set off the losses within the head. Hello? Source to source set off within the head. If not possible, then whatever loss remains, that is the loss of this head. Now this loss will be adjusted against the income of other heads. And if this cannot be done, only then you can carry forward. If you have enough profits available under the head, set off under the head. If cannot be set off under the head, enough profits available, enough incomes from other heads available, then set off against other heads. And if that is also not possible, then only you can carry forward. Got it, sir? All the losses you can carry forward? No, only those losses whose carry forward provisions are there. only these losses can be carried forward. The losses for which there is no carry forward provision, those losses cannot be carried forward also. Getting my point? Now one by one we are going to discuss these things only. Steps are like this only. First inter-source set off, then inter-head set off, then carry forward. Done, sir? Everyone? So first, read this part, please, everyone. I want all of you to read this. Have I explained the same thing or something different? Same thing? Done? Read this second. You are through with this now? Read no this much? Now read this part. Done, sir? Same thing I have explained. Sure. Read this part. So far I was explaining this only. Sir, I will do first inter-head, then inter-source. No, no, no. Same step. First inter-source set off, then inter-head set off. If failed, then carry forward. Same exact sequence, okay? If 70 fails, then 71. And if the losses cannot be adjusted as per 70 and 71, only then the carry forward provisions are invoked. Done, sir? Now one by one we are going to discuss all these sections, okay? Come to section 70. 70 talks about inter-source set off. Within the same head, the losses can be set off. Loss of a source of income can be set off within the same head against the profit of any other source of income. Yes or no? But there are certain exceptions. So all the exceptions we are going to do, but we are going to do those exceptions head-wise. Come on, tell me, which is the first head of income? Salary head. Can you see salary head is there? Under the head salary, can you have a loss? Think and give me the answer. Can you have a loss under the salary head? Will you have salary head loss? Give me the answer confidently. If you are having loss under the salary head, no. Give me your SRO number. I will write a letter to the ICI. How can you have loss under the head salary? Loss will arise only if the deductions are more as compared to taxable income, no? So under the head salary, this income taxable, this income taxable, this income taxable, this many incomes are taxable under the head salary. But on the name of deduction, what you are getting? Only standard deduction, maximum 50,000. And if you are following 115 BSc, then 75,000. Second, deduction for entertainment allowance, 5,000 rupees. And that too also if you are a government employee. If you are not a government employee, you are not going to get that 5,000 also. And professional taxes paid. For a particular year, no, the amount of professional tax max to max could be 2,500 in any state you go. So on the name of deduction, they are just not giving you enough amount of deductions. Deductions are very less. So there are no chances that under the head salary you will ever compute a loss. Loss will not arise under the head salary. Forget it. Forget salary head. Move ahead. Salary head will always give you positive income, positive income, positive income. Sure. Come to house property head. Under the head house property, multiple house properties can be there. Can any house property have a loss? No. Any house property can have a loss. SOP, annual value nil, interest deduction up to 30,000, up to 2 lakhs. Hello? Then you will have a loss. Loss of SOP. What about LOP, DLOP? Can you have a loss from LOP, DLOP? Yes. From LOP, DLOP also you can have a loss. It is not necessary that LOP, DLOP will always give you a positive income, because there the interest on housing loan deduction is unlimited. What if NAV is positive, 30% standard deduction you took, and the amount of interest was very high, and as a result of that there was a loss from LOP, DLOP? Yes or no, sir? So there can be a loss of LOP also, there can be a loss of DLOP also. So in short, loss of any house property can be there under the house property head. Yes or no? Is there any restriction on the set off? The answer is no. Under the head house property, loss of any house property can be set off against profit of any house property. Loss of SOP can be set off against LOP, can be set off against DLOP. Loss of LOP can be set off against DLOP. Loss of DLOP can be set off against LOP. But loss of LOP, loss of DLOP cannot be set off against SOP, because SOP will not have a positive income. If you are getting a positive income of SOP, again bring your SRO number. Hello? There was no restriction, and see, knowingly or unknowingly, we have also done that inter-source set off while doing house property chapter. Do you remember? We used to calculate the income of different house properties, and then there was a loss of one house property, there was a profit of one house property. We used to net the amount and write one amount as income from house property head. Yes or no? Unknowingly we were doing inter-source set off. Loss of one house property set off against the income of any other house property. So there is no restriction. Loss of any house property can be set off against profit of any house property. Yes or no? Will you have loss from SOP? Tell me. If you don't follow 115 BSc, then SOP income will be nil, and there will be interest deduction up to 2 lakhs. Yes or no? Up to 30,000, up to 2 lakhs. And as a result of that, SOP will have a loss. LOP or DLOP. There will be income minus there will be standard deduction minus there will be interest. This is standard deduction. This is interest. So can you have a loss over here also? Yes. So if you don't follow 115 BSE, there can be a loss of SOP also. There can be a loss of LOP also. Yes or no? This loss can be adjusted against income of any house property. This loss can be adjusted against income of any house property. There is no restriction. Will you remember this? But what if you follow 115 BSE? If you follow 115 BSE, then your SOP income will be nil only, because there will be no interest on housing loan deduction. Do you remember? If interest on housing loan deduction is not available, then SOP income will always be nil. There will be no negative SOP income. There will be no loss from SOP. But can there be loss of LOP and DLOP? Yes, even if you are following 115 BSE, still you are going to get entire interest as a deduction, no, from LOP, DLOP. There is no restriction on that. So for LOP and DLOP, you can still have a loss. Yes or no? Getting my point? Everyone? Now I'll bring you to this discussion later on when we'll be doing interhead set off, no? That time again I'll bring you to this discussion. Will you remember? So, if you follow 115 BSE, will there be any loss of SOP? No, because there will be no interest deduction. Can there be any loss of LOP, DLOP? Yes, it can be set off against any of the incomes. So even if you follow 115 BSE, even if you don't follow 115 BSE, under the house property head, loss of any house property can be set off against profit of any house property. There is no restriction. Will you remember this? Two heads are over. Salary head, there cannot be a loss. House property head, there can be a loss of a house property which can be set off against the profit of another house property within the same head. Yes or no? There is no restriction. Third head, PGBP. Do you remember there are different types of businesses under PGBP head? Speculation business is there, specified business is there, some other businesses are there. They are non-speculation, non-specified business, normal businesses. That time only I have told you, loss of any speculation business can be adjusted against the profit of any other speculation business only. Under the head PGBP, speculation business loss cannot be adjusted against the profit of any other business. Yes or no? And what is the reason for that? Because there are bright chances to have a loss in a speculation business. You are playing in price fluctuation. You want to earn through price fluctuation, and which purely depends on demand and supply of that goods, commodities, shares, securities, etc., which is not in your control. So there are bright chances that in the price fluctuation, whatever profit you want to earn through speculation, yes or no, instead of earning that profit, you end up having loss. And majority of the cases, there are losses only in speculation. Done, sir? So knowing that speculation is going to give you loss only in most of the times, why to allow that loss to be set off against other business incomes? We will not allow. Oh, you have another business, another speculation business. We were thinking that in this speculation business also you are going to get a loss. But you got a profit in this business. Wow. If you will set off this loss, no, speculation business loss against this speculation business profit, we would not mind only. Why? Because we were thinking that for this speculation business also you are not going to have any profit. So from the very beginning, we were under this impression only that this speculation business is not going to give you any profits only. But if it is giving you a profit and you set off your speculation business loss against this profit, then there will be no problem to us. Set it off. But you cannot set off the loss of a speculation business against the profit of any other business. Can you set off the speculation business loss against speculation? Yes. Speculation against specified, not possible. Speculation against normal, not possible. Getting my point? Speculation only against speculation. This is the second exception. Will you remember? First exception. Sorry, this is the first exception. Second exception, specified business. Have you heard about specified businesses? 35AD. Those 15 businesses. There are huge chances that there is a loss for specified business also. How come? Do you remember? Under 35AD, you get the deduction for capital expenditure also. Meaning the cost of the asset is allowed fully as a deduction, as your expense only. So this much cost allowed as a deduction from this much income, there are bound to be losses. Hello? Losses can happen. Bright chances that specified business will also give you a loss. And knowing that, how can we allow that loss to be set off against other business profits? Do you have any other specified business? Yes. We were thinking that that specified business is also not going to give you any income. And if that specified business is having a profit, if that specified business is having a positive income, against that if you set off the specified business loss, we will not have any problem. But we will have a problem if you set off this loss against any other business profits against which you are going to pay tax to us. Yes or no? Hello, sir. So specified business loss can be set off against the profits of any other specified business only. You cannot set off the specified business loss against the profit of any other business. So specified can be set off against normal? No, sir. Specified business loss can be set off against speculation? No, sir. Specified business loss can be set off against specified business profits only. Yes or no? Now see, you have two businesses. Specified business A, specified business B. For specified business A, you are getting 35AD deduction. But from specified business B, you are not getting 35AD deduction. Why? Because you would not have satisfied some conditions of section 35AD. So, business is a specified business. Business B is also a specified business. But for that business, you are not eligible to claim 35AD deduction because some conditions of section 35AD you would not have fulfilled. So can you set off the loss of a specified business against the profit of any specified business? Yes. Even if that specified business is eligible for 35AD or not eligible for 35AD. But since the business is a specified business, from that business 35AD deduction is available or not available will not make any difference. Any loss of specified business can be set off against profit of any specified business, whether for that specified business 35AD deduction was available or 35AD deduction was not available, will not make any difference. And this thing I have already told you while doing PGBP head, if you remember. Now under the head PGBP, can you have a normal business? Yes. Is there any restriction on the set off of loss of a normal business? The answer is no. Normal business loss can be set off against any business profits. Whether it is normal, whether it is speculation, whether it is specified, even if it can be set off against any presumptive business income. Do you remember 44AD, 44ADA, 44AE? So for any business, if you are calculating the profits as per presumptive provisions, 44AD, 44ADA, 44AE, etc., against those profits also, the loss of normal business can be set off. Because loss of a normal business can be set off against profits of any business, even if calculated on a presumptive basis. What did I say? Loss of a normal business can be set off against the profits of any business, even if calculated on presumptive basis. Meaning that Normal business loss can be set off against normal business profits? Yes, sir. Normal business loss can be set off against speculation business profits? Yes, sir. Normal business loss can be set off against specified business profits? Yes, sir. Normal business loss can be set off against business profits which is calculated on presumptive basis? The answer is yes, sir. Normal business loss, there is no restriction, can be set off against profits of any business under the PGBP head. Will you remember this? First exception, PGBP head. First exception. See, first two heads, no, there are no exceptions only. Salary head, there cannot be a loss. Forget about salary. House property head, loss of any house property can be set off against profit of any house property. Will you remember? Hello? Now PGBP head, speculation only against speculation. This is the first exception. Specified only against specified. This is the second exception. Normal business loss, no restriction. Against any business profit you can set off. Yes or no, sir? Now coming to fourth head. What is the fourth head of income? Capital gains, no? And you know what are the exceptions. Long-term capital loss of any capital asset can be set off against, only against, long-term capital gain of any capital asset. It cannot be set off against short-term gain. So any long-term loss can be set off against any long-term gains. Any long-term loss against any long-term gain only. Now you don't have to see that long-term loss of shares can be set off against long-term gain of shares only. No, it can be set off against long-term gain of jewelry also. It can be set off against long-term gain of immobile property also. Long-term loss of immobile property can be set off against long-term gain of shares also. Long-term loss of any capital asset can be set off only against long-term gain of any capital asset. But it will be set off only against long-term gain, not against short-term gain. But there was no such restriction for short-term losses. Short-term losses can be set off against short-term gain of any capital asset, yes, and they can be set off against long-term gain of any capital asset. So short-term capital loss of any capital asset, short-term capital loss of any capital asset can be set off against short-term capital gain of any capital asset. It can be set off against long-term capital gain of any capital asset. There is no such restriction. Fourth head, capital gain, over. Now fifth head, IFOS. Do you remember activity of owning and maintaining racehorse? Activity of owning and maintaining racehorse. In majority of the cases, that activity is going to give you a loss. Acha, okay, tell me one thing. Why long-term loss only against long-term gain? Because of the indexation. Indexation was available till now. Do you remember? And as a result of indexation, the cost will be inflated. The cost will be too high as compared to the net consideration. So there are bright chances that long-term losses will arise. Hello, sir. Long-term losses will arise because the cost is not allowed. Index cost is allowed. And indexation was available till now. Indexation was available, and as a result of that, the cost used to be higher. The cost used to get inflated, and that inflated cost, if you reduce from the net consideration, there are bright chances that net consideration is lower and the inflated cost, index cost of acquisition, index cost of improvement are higher. So there are bright chances that here for long-term capital asset you are going to have a loss only. And knowing that you are going to have a loss, how can we allow you that loss against a profit on which you are going to pay us the tax? Oh, do you have any other long-term capital asset? Yes. We were thinking that from that long-term capital asset also, you are not going to have any positive income. But if there is some positive income from that long-term capital asset, you can set off these losses against that. We will not have any problem. Because that gain we were not expecting also that you are going to get that gain. And if that gain is arising, against that if you are setting off these losses, then we will not have any problem. But how can we bloody allow you the set off of those losses which are, which are very easy to calculate against the taxable incomes on which you are going to pay us the tax for sure. Getting my point, sir? Now, activity of owning and maintaining resource. Don't you think that this activity is also going to give you a loss only in most of the cases? What will be the income of this activity? Stake money. If your horse will participate in a race, he will come first, second, third. So the stake money which people was betting on your horse, out of that stake money you are also going to get some portion of the stake money, and that will be your income of this activity. Minus the expenses under section 57. What expenses? All the expenses to run that stud farm, to do this activity. Yes or no? Don't you think these expenses will always be there and you are always going to get the deduction for these expenses, but the income from this activity may or may not arise? And there are bright chances that income may not arise only, or income arising is very less. So income may not arise, or income arising, stake money will be very less as compared to the expenses which are going to get allowed. Yes or no? And knowing that it is going to give you a loss, we cannot allow you the set off of this loss against any other income under the head IFOS. So under the head IFOS, from any other source of income, you cannot take the set off of this loss. Loss from an activity of owning and maintaining racehorses, this type of loss can be set off against the profits of this type of activity only. So if you are doing this activity in Mumbai, and Mumbai activity, you are owning and maintaining racehorses in Mumbai. So activity is done in Mumbai. If this activity is giving you a loss, and another activity of owning and maintaining racehorse you are doing in Bangalore, which is giving you a profit. We were not thinking that Bangalore activity is also going to give you a profit. We were thinking that even the Bangalore activity is going to give you a loss. But fortunately, you are having a profit in that activity. So set off the loss of Mumbai activity from Bangalore activity, or set off the Bangalore activity loss against the Mumbai activity. Will not have any problem. Yes or no? Because loss of this activity can be set off against the profit of the same type of activity. Hello, sir. Against no other source of income. So under the head IFOS, any other source of income, against that source of income, these type of losses cannot be set off. Loss from an activity of owning and maintaining racehorse can be adjusted only against the profit of this type of activity. So under the head IFOS, do you have any other activity of owning and maintaining racehorse? Yes. Does it have any profit? Yes. Against that profit, you set off this loss of this activity. Do you have any other source of income? Yes. Against that, can you set off this loss? The answer is no. You cannot. Will you remember this? But there is no restriction on the set off of loss of any other source against any other source of income. So under the head IFOS, this is your IFOS head. S1, S2, S3, S4, S5. 5 sources of income are there. This source is an activity of owning and maintaining racehorses. AOMRH. Activity of owning and maintaining racehorse. And say this is your normal type of activity. Loss of this activity cannot be set off against any other source. If you have any other activity of owning and maintaining racehorse. So for example, activity 4, this is also activity of owning and maintaining racehorse. This can be set off against this, and this can be set off against this. That's it. They can be set off against each other, but they cannot be set off against any other sources of income. Will you remember this, sir? Now can I say both these activities are having what? Loss. This is also having profit. This is also having profit. This is also having profit. Both activities having profit. But this source of income, S1, is having a loss. So is it a loss from an activity of owning and maintaining racehorse? No, this is a normal loss from any normal activity, from any normal source of income. Yes or no? So this loss can be set off against any source of income. There is no restriction. It can be set off even against the profit of this activity. Getting my point, sir? So any other source of income having a loss, any other source of income, normal source of income is having a loss. That loss can be adjusted within the IFOS head. There is no restriction. It can be adjusted against any source of income, including the profits of activity of owning and maintaining racehorse. Against that profit also this can be set off. Hello? But the reverse is not possible. Loss of an activity of owning and maintaining racehorse cannot be set off against any source of income. It can be set off against profit of same type of activity. Yes or no? Any normal source of income having a loss, any normal source of income having a loss, can that loss be set off against any source of income under the head IFOS? Yes. Even against activity of owning and maintaining racehorse, whatever profit was there, from that also it can be set off. There is no restriction. But don't you think that this is your winnings income? Under the head IFOS, can you have a winnings income? Against winnings income, no loss can be set off. So loss of source 1 cannot be set off against this. Activity of owning and maintaining racehorse, the loss is there. Forget about winnings. We don't allow it to set off against any other source. Forget about winnings. Hello? Getting my point, sir? Because against winnings income, there cannot be any loss which you can set off against the winnings income. Can you? Now wait. This winnings activity, either you win or you lose. Either you win or you lose. If you win, against that winnings income there is no loss which you can set off. But if you lose, don't you think that if you lose there is a loss here? Loss from casual activity can be there or not? So there is a casual activity. You are taking lottery tickets. Every time when you take a lottery ticket, the money which you have, money which you have used to buy the lottery ticket is gone. You are not winning lottery. So whenever you put the money to buy the lottery ticket, that entire money goes away. That is your loss only, no? Or whenever you do the gambling, whenever you play the card games, whenever you go and play casino, etc., you lose your money only. That is your loss only, no? So if the casual activity you win, if in this activity if you win and you get income, that is your winnings income. But if in this same activity if you lose, so you lose your money, that is your loss only, no? So loss of the casual activity, what will happen with that? Dead loss. What will you call it? It is a dead loss. That loss cannot be set off and that loss cannot be carried forward also. No carry forward, no set off is available for loss of casual activities. Not even against the income of casual activities, not even against the winnings income. You cannot say that, see, this is the same activity, no, which I was doing and getting the loss. From this activity, see, now I have got the winnings. No, against that winnings also you cannot set off. Forget about any other income. Against the winnings also it cannot be set off. Yes or no? So what type of loss it is? Dead loss. Not eligible for set off, not eligible for carry forward. Sir, will you remember this, sir? Sir, what we are doing? We are doing inter-source set off. Meaning we are first finding out the income of each head by setting off the losses under the same head. Yes or no? So either the head's positive income will come or the head's negative income will come. But for that, whatever sources are there in the head, we have to adjust those sources against each other. That we are doing. So if there is a loss from any source of income under a head, sir, if there is a loss from any source of income under a head, can you set off that loss? Can you set off that loss? Yes. But first step, you have to set off that loss under the same head against any other source of income. Yes or no, sir? But while doing that inter-source set-off, this is known as inter-source set-off. While doing that inter-source set-off, you have to keep the exception in mind. Salary head, no exception, because salary head there cannot be a loss. House property head, is there any restriction? Is there any exception? No. Loss of any house property can be set off against profit of any house property. SOP can be set off against LOP, can be set off against DLOP. DLOP can be set off against LOP. LOP can be set off against DLOP. There is no restriction. Yes or no? Now, PGBP head. Speculation only against speculation. Specified only against specified. Normal business loss, no restriction. Can be set off against normal business also, speculation business also, specified business also, as well as profit of presumptive business income also. Normal business loss, there is no restriction. Yes or no? Now under the head capital gain. Under the head capital gain. Long-term capital loss only against long-term capital gain. There is no restriction on short-term capital loss. Short-term capital loss against short-term gain also, and short-term capital loss against long-term gain also. Hello sir. Coming to IFRS head. Loss from an activity of owning and maintaining racehorse. Only against the profit of same type of activity it can be set off. It cannot be set off against any other source of income. Yes or no? But reverse is possible. Any other normal source of income giving you a loss can be set off against any source of income. There is no restriction, including the profit of owning and maintaining racehorse. Against that also it can be set off. Yes or no? And then I told you, remember that no loss can be set off against winnings income. So any source of income giving you a loss under the head IFOS. Any source of income giving you a loss under the head IFOS, the loss of that source cannot be set off against winnings income. Never, never, never. Even the loss of casual activities which results into winnings income, yes or no? Even the losses of casual activities cannot be set off against winnings income. So where can they be set off? They cannot be set off, they cannot be carried forward, they have to be ignored. Hello sir. Dead losses, no set off, no carry forward is available. Done sir? Now one important point I will like to highlight. If there is a source of income which gives you positive income and this income is exempt, please look at me here. If there is a source of income giving you income and this income is exempt, this income is exempt, so is it necessary that the source will always give you income? This source can give you a loss also, no? Best example is agriculture in India. From agriculture in India, can you have net agriculture income, positive net agriculture income? Fully exempt, 10-1. But from this agriculture in India, can you have a loss? Yes. Will not be allowed for any set off, any carry forward. Yes or no? We have forgotten the income of this source. So from this source, whatever loss will come, no, you also forget that. The loss of a source of income, the loss of a source of income will be ignored if the income of that source of income was exempt. When the income you are earning from that source, we are forgetting, no. Now you are getting a loss from that source of income, you forget. Can you have share of profit in a partnership firm? Do you remember share of profit in a partnership firm? Is it your taxable income or your exempt income? Exempt income. So from that partnership firm, you will have the share of loss also. So share of profit is exempt from a partnership firm. So from that same partnership firm, you are getting a share of loss. Will you claim that loss as a set off? Forget about the loss. Why? Because we have forgotten the profits. Profits we exempted, no. So loss of this source, you forget. Supreme Court judgment. So any source giving you a positive income, if the income of that source is exempt, if that same source of income is giving you a loss, then loss of that source cannot be set off, cannot be carried forward. No carry forward, no set off of such losses from that source is available. Will you remember, sir? This was section 7070. Done. Now let's come to 71. This entire section 70 I have completed. Okay, all the things I have completed. This, everything I have completed. Now coming to section 71. Inter-head set-off. When are you going to come to section 71, sir? When are you going to come to section 71, sir? Only if you cannot set off the loss within the same head. Because there was no source of income. Or even if there is a source of income, the loss were higher as compared to the income of that source. Hello, sir? Possible, no? Or even if there was a source of income, even if there was enough profits, but against that source, this loss cannot be adjusted. Just think that under the head PGBP, you have two business. One is speculation, one is normal. Normal business having 50 lakh rupees of profit. Speculation business having only 5 lakh rupees of loss. Still that loss cannot be adjusted within the same head. Why? Because the profits which are available are not eligible profits against which it can be set off. Hello, sir. What if both the businesses are normal? One normal business giving you a loss of rupees 50 lakhs. Another business which is a normal business having a profit only of 10 lakhs. Still 40 lakh loss will remain. Now to set off that loss under the head PGBP, there is no other business income. So that will become the loss of PGBP head. Hello, sir. From the normal business. Getting my point? House property head. One house property having a loss. Another house property is not there only. So this loss will become the loss of house property head. Hello, sir. House property head. Loss of house property 1. Loss of house property 2 also. Now both will combine. There will be a loss of house property head. So loss of house property 1 is there. House property 2 having a profit. But the profit is very less as compared to the loss of house property 1. There will be still some loss will remain. No. To that extent the loss will be adjusted. To the extent of income. But there will be still some loss remaining. No. That loss will be the loss of house property. Just like this, for every head, I have to see that if the loss under the same head cannot be adjusted, then that loss becomes the loss of that head now. Now, loss of a particular head can be set off against profit or the positive income of other heads. Will you remember? There will be profit of other heads. There will be positive income of other heads. Against that profit, against that positive income of other heads, now you set off the loss of this head. No problem. Section 71, 71. Will you remember? 71. Now there are certain restrictions, exceptions. First exception, salary head. Forget. There is no loss only. There cannot be a loss from salary head. No, forget. Can there be a loss of house property head? Can there be a loss of house property head? Yes, sir. I have 3 house properties. 2 are SOPs, both are having a loss. And 1 is LOP, having a positive income. SOP loss was, sir, 1,80,000. And LOP income was only 1 lakh. 80,000 loss still remains, sir. So that is a loss of house property head. Hello, sir. Can I have a loss of LOP too? Yes, I am having 2 SOPs, both having the total loss of 1,80,000, and house property 3, which was LOP, I am having a 3 lakh rupees of loss from that LOP also. So now my house property head will show loss of 4 lakh 80. All the house property is having loss. So total loss of all the house properties is 4 lakh 80. Can it be there? Is there any restriction? The answer is no. In terms of set off against which head, there is no restriction. House property loss can be set off against any head. Can you set off the house property loss against salary? Yes. Can you set off the house property loss against PGBP? Yes. Can you set off the house property loss against capital gains? Yes. Can you set off the house property against IFOS? Yes, but not against winnings. From IFOS, separate the winnings, because from winnings there is no loss which can be adjusted. Hello, sir. House property loss can be adjusted against any head. Any head means any head, but to the extent of maximum 2 lakhs. To the extent of maximum 2 lakhs. So if you are having a house property loss of more than 2 lakhs, to the extent of 2 lakhs, the loss can be adjusted against any head. Now the excess loss which cannot be adjusted this time can be carried forward to subsequent years as per 71B. Will you remember, sir? Sir, will you remember, sir? Pay attention now. Are you following 115 BSc? Yes. Now please be very careful, huh? Please. The only catch under the set of carry forward chapter is here only. Only catch. And this is the only place where 115 BSc gets attracted. Can you see this? Pay attention. You are an assessee. You have opted out of 115 BSc, meaning you are not following 115 BSc. Normal provisions you are following. Interest on housing loan deduction. Can you claim from SOP? Yes. If you don't follow 115 BSc, under the house property head, can you claim interest from SOP? Yes. So interest on housing loan deduction can be available from SOP. Allowed up to 2 lakhs. So there can be a loss from SOP. If there is no interest, the income will be nil. But if there is interest, so that interest will also be allowed and there will be a loss. Hello, sir. Loss of SOP. LOP, DLOP, interest can be claimed? Yes. If you are not following 115 BSc, interest on housing loan can be claimed from SOP also, it can be claimed from DLOP also. Then no, sir. If interest on housing loan is there, you are claiming from SOP, you will get a loss. And if interest on housing loan is there, you are claiming from LOP, DLOP, fully allowed. There is no restriction also, fully allowed. Here it was 2 lakhs maximum and here it was full deduction. Do you remember, no? And as a result of that, there can be a loss here also. There can be a positive income that will be taxable. There can be nil income for SOP. No need to do anything. But for LOP, DLOP also there can be a loss and there can be loss of SOP. This loss can be adjusted. This loss can be adjusted. No problem. Within the same head, the loss of SOP can be adjusted against any property. Within the same head, the loss of LOP, DLOP can be adjusted against any property. There is no restriction. And if it cannot be adjusted within the house property head, if this cannot be adjusted, you can set off against other heads up to maximum 2 lakhs. Hello. And still cannot be set off, then you have the option to carry forward as per section 71B. Yes or no? As per 71B, you can carry forward. Now, sir, what if you follow 115 BSc? If you follow 115 BSc, then under the head house property, interest on housing loan cannot be allowed from SOP. Do you remember that? So there cannot be SOP loss. SOP's resulting income will always be nil. But can there be a loss under LOP, DLOP? Yes. If you are following 115 BSc, interest on housing loan deduction is still fully allowed from LOP DLOP. Yes or no, sir? And if it is fully allowed, then the resulting income can be a loss here. Hello, sir. Positive, then there is no problem, but negative can also come, no? Loss of any house property can be set off within the same head against profit of any house property. There is no restriction. Inter-source adjustment will happen. But what if this loss could not be adjusted within the head? I would have made this as a loss of house property head, yes or no? And I would have set off against other heads to the extent of maximum 2 lakhs. Hello. So loss of house property head is allowed as a set off against any head to the extent of maximum 2 lakhs. This is not available if you follow 115 BSc, and that loss cannot be carried forward also. Getting my point, sir? So first, think about the positive. Think about the normal provisions. Normal provisions where you don't follow 115 BSc. If you don't follow 115 BSc, what will happen? Under the head house property, SOP will have a loss, LOP, DLOP will also have a loss. That loss can be adjusted within the same head against profit of any property. If not, then it will become the loss of that head. Can be adjusted against any head to the extent of maximum 2 lakhs. Still cannot be adjusted, then it can be carried forward. Will you remember this? Hello, sir. If you don't follow 115 BAC, then you are supposed to do this. But if you follow 115 BSc, then first thing, SOP you will not have a loss only. Why? Because from SOP interest is not allowed. You remember, no? From LOP, DLOP you can have a loss because their interest is fully allowed. And that loss can be set off within the same head. There is no restriction. Inter-source adjustment will happen. Loss of any property can be adjusted within the same head against profit of any property. But what if it cannot be set off within the same head? Now that loss will become the loss of the head, no? Hello? To the extent of 2 lakhs that could have been adjusted against any head income, no? Will not be allowed now. This inter-head set off of house property loss to the extent of 2 lakhs shall not be available if you follow 115 BSc. So what's the deal? I'll carry forward. No, you cannot carry forward this loss also. This loss will lapse. This is very, 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 very important. Please remember this part. Please remember. If you want to copy, you can copy. Do it fast. Do whatever you want, but do it fast. Is it visible, everyone? Visible? Should I zoom in or zoom out? Zoom in. Now it is visible properly. Please copy. Copy this fast. Did you copy? Done. So, this was regarding your house property, okay now? See, this is your house property loss. When house property loss will be there, okay? If you follow 115 BSE, if you don't follow 115 BSE, house property loss is there, house property loss is not there. See, whenever, if you follow 115 BSE or you don't follow 115 BSE, the loss can be set off within the same head. There is no restriction on that. But there was only one, there is only one restriction, that if you don't follow 115 BSE, then the loss you can adjust from other heads to the extent of 2 lakhs, which you cannot do if you follow 115 BSE. If you follow 115 BSE. So inter-head set-off of house property loss will be gone, which was available to the extent of 2 lakhs. And that loss cannot be carried forward also. That loss will lapse only if you follow 115 BSE. Got it, sir? And see, now the first exception, when you do inter-head set-off, what is the first exception? Loss of house property head can be set off against any head to the extent of maximum 2 lakhs. Please write down here, only if assessee opts out of default tax regime under section 115 BSE. That is 115 BSE followed or not followed? Not followed. If 115 BSE is followed, this will not be allowed. And this loss, which cannot be allowed against any other heads to the extent of 2 lakhs, will not be allowed for carry forward also. Sure? No, sir? Should I move ahead now? Okay. So, this was your first exception. Now coming to the second head of income. House property is done. Next head, PGBP. Speculation business loss can be adjusted only against speculation business profits, no? Bloody, we don't allow it to set off against any other business income. Will we allow it set off against other heads? No. So inter-head set off of speculation loss not available. That will be directly carried forward. Getting my point? Third, specified business loss can be set off only against the profit of specified business. We don't allow it to set off from other business incomes. Will we allow it against other heads of income? No. So inter-head set off of, what did I say? Inter-head set off of specified business loss is also not allowed. 3 exceptions. House property loss can be set off against other heads to the extent of maximum 2 lakhs. And this will not be allowed if you are following 115 BSE. Right? Next one. Speculation business loss, inter-head set off not possible. Specified business loss, inter-head set off not possible. What about the normal business loss? Normal business loss within the same head can be allowed from any business profits. If cannot be set off, can be allowed against other heads also, except salary. Normal business loss within the same head can be claimed against any business profits if cannot be set off within the same head. It can be set off against any head of income except salary. Will you remember? Because it is very easy to calculate business losses, and knowing that you are earning salary, we allow you to set off of what? Business losses. No, every employee will now start doing what? Business. And start showing bogus expenses, start showing losses of business, and that they will set off against their salary income. So the income, confirm we know that against salary income you are going to pay tax, against that also we will not be able to get. So we cannot take that risk of allowing you business loss against salary income. Yes or no? So except salary income, against any head you can claim, but not against salary head. Yes or no? Now, long-term capital loss, short-term capital loss. Both the losses can be set off within the same head only. Long-term only against long-term, short-term against short-term as well as long-term, both. But if any long-term loss cannot be adjusted within the same head, it cannot be set off. Bloody, we are not allowing it against short-term also. Will we allow it against other heads? No. Inter-head set off not possible. Short-term we are allowing against short-term also, long-term also. But since it is a capital loss, we cannot allow it against other revenue nature incomes. Under other heads of income, revenue nature incomes are getting taxed. So no inter-head set off is allowed for, no inter-head set off is allowed for capital losses. Short-term capital losses also, long-term capital losses also. Inter-head set off not possible. Directly carry forward. Yes or no? Speculation losses, directly carry forward. Specified business loss, directly carry forward. Okay. House property loss against any head up to 2 lakhs. Excess cannot be set off, carry forward. And that also you can do if you don't follow 115 BSc. Normal business loss can be set off against any heads except salary, but still cannot be set off, then carry forward. Getting my point? Loss from an activity of owning and maintaining resource. Now we are coming to the last head, IFOS. Loss from an activity of owning and maintaining resource can be set off against same type of activity under the same head. Bloody, we don't allow it to set off against other sources under the head IFOS. Will we allow against other heads of income? No. So inter-head set off is not possible for loss of an activity of owning and maintaining resource also. Yes or no? Will you remember? It can be set off within the same head, but also only against the income of same type of activity. If not, then inter-head set off not possible, carry forward. Now, very important thing. Any normal source of income. What did I say? Any normal source of income under the head IFOS. Can it have a loss? Can that loss be set off within the same IFOS head? Yes. Against any source of income? Yes. Including the activity of owning and maintaining resource. The profit of that activity also it can be set off. I told you, no? So normal source of income having a loss under the head IFOS. That loss within the same head can be set off against any source of income except winnings. Because from winnings no loss can be set off. Yes or no? It can be set off against the profits of activity of owning and maintaining resource also. But what if it cannot be set off within the same head? Now it will become the loss of IFOS head. Is there any restriction? No restriction. It can be set off against any head. House property, salary, PGBP, capital gain. So loss of IFOS head from normal source of income. Hello? From normal source of income. Loss of IFOS head from normal source of income can be set off against any head. There is no restriction. If against any head it cannot be set off, then carry forward is not allowed for such losses, because there is no section to carry forward such losses. So which losses can be carried forward? Only house property loss as per 71B, only normal business loss as per section 72, only speculation business loss as per section 73, only specified business loss as per section 73A, only capital losses, long term as well as short term, as per section 74, and only the loss of an activity of owning and maintaining resource as per 74A. Other than these losses, all other losses, if cannot be set off under the same head, if cannot be set off against other heads within the same year, they will be lapsed. There are no carry forward provisions for other losses. Yes or no, sir? Will you remember? So tell me, if under the head IFOS, this is your normal loss. S2 is a normal source of income, giving you a loss. Can this loss be set off against any source of income under the head IFOS? Against this, against any source it can be set off, but not against winnings. Okay, no? Even if activity of owning and maintaining resource is there, against that also it can be set off. Now, if this loss is 10 lakh rupees, how much? 10 lakh. And the income of all the sources is only 8 lakhs. So this loss within the same head can be set off to the extent of 8 lakhs only. Still 2 lakh loss will remain. Hello? Now, other sources head will have 2 lakh rupees of loss. This will become the loss of IFOS head. Hello, sir. Can it be set off against capital gains? Yes. Can it be set off against PGBP? Yes. Can it be set off against house property? Yes. Can it be set off against salary? Can it be set off against salary? The answer is yes. Loss of other sources head can be set off against any head of income. There is no restriction. But all the other sources of income were having only 1.5 lakhs income. Come on, tell me, what will you do now? That 2 lakh rupees of loss will be set off this year to the extent of 1.5 lakhs only. Still 50,000 loss remains. Loss of other sources remaining 50,000. Can you carry forward? Can you carry forward? The answer is no. Why? Because to carry forward such losses, there has to be provisions. No provisions are made to carry forward other sources losses. So without the absence of carry forward provisions, the losses cannot be carried forward also. Yes or no, sir? Please pay attention. See, read this part. Whatever I have explained, no, is this only. Read this note number 1. Entire note number 1. From here to here. I have explained this entire part just now. Loss from any normal source of income. Loss from any normal source of income. Under the head IFOS. Okay, no? Except loss of owning and maintaining resource. That loss I am not talking. I am talking about the normal source of income. That normal source of income is giving me a loss. Can that loss be set off against winnings? No, it cannot be set off against winnings. It can be set off against any other source of income? Yes, including the income of activity of owning and maintaining resource. You set off within the same head. This set off will happen. But still, this loss was 10 lakhs and all the incomes were 8 lakhs. How much you could set off? Only 8 lakhs. 2 lakhs still remains. Now that 2 lakh could not be adjusted within the IFOS head. What will you do? Then such loss would be eligible for interhead adjustment. It can be set off against capital gain. It can be set off against PGBP. It can be set off against house property. It can be set off against salary. I told you that? So that 2 lakh still remains. It can be set off against income from any head without any restriction. But still, if that loss remains, if the above losses still could not be adjusted even after applying the provisions of intersource and interhead adjustment under 70-71, then such loss shall lapse and shall not be allowed to carry it forward to subsequent years for set off in later years, because there are no carry forward provisions for carry forward of such losses. I explained the exact same thing. Please don't commit a mistake over here. Please. Okay, sir? So are you done with section 70 and 71? Will you be able to do intersource set off? Will you be able to do interhead set off? Subject to certain restrictions, subject to certain restrictions. Restrictions you have to remember. In the exams, they are going to test you on restrictions, whether you know the restrictions or not. So be more attentive on the restrictions. Okay, sir? Now, even after applying section 70, even after applying section 71, still the losses could not be adjusted. Can you carry forward such losses? Yes. If the loss is house property loss, you can carry forward. You don't listen only. If applying 70 and 71, I'm talking about all the losses now. I'm not talking about only this loss. This loss discussion is over. Even after applying section 70 and 71, some losses could not be adjusted during the same year. For example, house property loss. Within the same head also cannot be set off. Head to head also not set off. Can that house property loss be carried forward to subsequent year? Yes, 71B. Normal business loss within the same head cannot be adjusted against other heads except salary cannot be set off. Then carry forward. 72. Speculation business loss, carry forward. So now we'll learn the carry forward sections also. Yes or no? Shall we begin now? Okay. See. Very first section. 71B. 71B. This section says that you can carry forward and set off your house property loss. So during the year, if your house property loss, you cannot set off. 71B allows you that you can carry forward your house property loss to subsequent years. Whenever you will carry forward your house property loss, after its carry forward in the subsequent year, it will be set off. But only against the income of house property. You cannot set off your house property loss after carry forwards. After its carry forward, you cannot set off against any income. You can set it off only against income from house property. Either from the same house property you will get an income, or from any other house property you are going to get the income. So from that house property income you are going to get the set off. You will say, sir, what if in the next year I am not having house property income? Then no problem. Carry forward to the subsequent year, second year. In that year you will get the house property income of the same property or other house property. Yes or no? So in the second year, whatever house property income will be there, from that you can set off. Sir, what if I don't have a house property income in the second year also? No problem. Carry forward to third year. In third year, you will have house property income. Sir, in the third year also, wait. Carry forward for 8 years. How many years? 8 years. Within next 8 years, whenever you are having house property income, either from the same property or any other house property, from that income you can set off the house property loss. So within the same year, under the same head, set off against any house property. Yes or no? Or you can set off against other heads also to the extent of maximum 2 lakhs. But if you cannot adjust in the same year, carry forward to the subsequent year. After its carry forward, it will be set off only against house property income. And maximum carry forward allowed for how many years? 8 years. Now see, there is no requirement that the loss, if the house property loss relates to a specific property, that property should also be there in the subsequent year, there is no requirement. So it is not required that the year in which you have carried forward the loss, in that year also you should have that property to which the loss relates. Why? Because there is no requirement that the loss will be set off against the income of the same property. Yes or no? The loss can be set off from the income of any house property, but it will be set off only against the income from house property. Yes or no? So the year in which you are carrying forward the loss, in that year, if the property to which the loss relates, if you are not the owner of that property, if that property is not there with you, don't worry, still the loss will be carried forward in that year, and in that year whatever house property income is there, from that income the loss will be set off. Will you remember this? This was your section 71B. Now coming to section 72, this is important. Loss of normal business. Normal business loss. Current year what you do? Set off against any business income under the same head. If not done, then you can set off against any other head except salary. If it cannot be adjusted, section 72 allows you to carry forward and set off your business losses also, normal business loss. So your normal business loss can be carried forward to subsequent year, and in the subsequent year it will be set off only against any business income. Now, in the subsequent year, you can have normal business income. From that also you can set off. In the subsequent year, you can have speculation business income. You can have specified business income. Even the presumptive business income of the subsequent year, against that you can set off. But you will be able to set off only against what? Business income only. Sir, what if in the subsequent year I don't have a business income? Then don't worry. In that year, against any other income you cannot set off. You have to set off only against business income only. Yes or no, sir? So in the subsequent year, if you don't have a business income, then don't worry, carry forward to the next year. Next year you will have the business income from the same business or any other business. Yes or no? From that you can set off. Sir, what if in the next year also I don't have? Don't worry, carry forward to the next year. You can carry forward for a period of 8 years. In the next 8 years, whenever you will have a business income, either from the same business or from any other business, you are having business income, against that business income only, the carried forward business loss can be set off. Yes or no? Will you remember this? Now, pay attention. The year in which you have carried forward the business loss, is it necessary that in that year you should have that business also, the business to which the loss relates? Not necessary. So even if you are not the owner of the business to which the loss relates, in the year in which you have carried forward the loss and you want to set it off, still you will be able to carry forward and still you will be able to set off. Because there is no requirement that the loss will be set off only against the business income of the same business. Yes or no? It can be set off against any business income. So in the year in which you have carried forward the loss, in that year, if you are not having that business to which the loss relates, still you will be able to carry forward the loss and you will be able to set it off against any business income of that year. Will you remember this, everyone? Now there is one requirement. Please don't read this note number 3. Forget this. Ignore this note. Okay. Now there is one requirement that see, if my business is there, my business. So my business loss can be carried forward by whom? Myself only, no? I can only carry forward my business loss and I can only set off my business loss after carry forward. Can my business loss be carried forward by anyone else? Yes. If my business is transferred to my son on inheritance, my son can carry forward that loss. So there are certain exceptional cases where the loss of a business can be carried forward by any other assessee also. In case of amalgamation, the loss of amalgamating business can be carried forward by loss of the business which was done by the amalgamating company, can be carried forward by the amalgamated company also. In the case of demerger, the loss of the business of the demerged company, proportionate losses can be carried forward and set off by resulting company also. When a company gets converted into LLP, so the business loss of the company can be carried forward by the LLP also. If there is a partnership firm or a proprietary concern which is getting converted into a company, yes or no? So the losses of the business of the partnership firm or the proprietary concern can now be carried forward by the converted company also. But remember, the carry forward will be available for the balance period only, not fresh 8 years. Getting my point? If I have already carried forward the loss for 5 years, so my son can carry forward for balance 3 years. Yes or no? Amalgamating company has already carried forward the losses for 3 years. So the amalgamated company can carry forward for further 5 years. Getting my point? So this is something which you have to remember. General knowledge point. Okay, no? Now one important point is coming. See, if I say that in the current year meaning previous year 24-25, okay, in this year no, I am having one business income. Now first understand, against this business income, can I set off the current year depreciation? Yes. First of all, from my business income, I will have to take the current year depreciation. From this, can I adjust the current year capital expenditures on scientific research? Yes, sir. Against this, I can adjust current year capital expenditure on family planning also. Against this business income, I can set off current year business loss of other businesses. Against this, I can set off the current year losses also of other heads. Yes or no? Just like my house property head, just like my IFOS head, the other heads losses also can be adjusted against this. Against this, can I set off the brought forward business losses? Yes, sir. Against this, can I set off the unabsorbed depreciation of the earlier years, brought forward unabsorbed depreciation also? Against this, I can set off the brought forward capital expenditures on scientific research or family planning also. See, there are many things which can be adjusted against one single income. This single income is eligible income against which many things can be adjusted. Now you have these many things to be adjusted against business income. Now the first question you will ask, what should I adjust first? Then what should I adjust the next, second one? So what should be the priority of set off against the business income? So from the current year business income, priority of set off, priority of adjustment or set off, that priority I am giving you. Always follow this, okay, in order to get maximum benefit. See, current year business income, current year business profit cannot be derived without adjusting current year depreciation and capital expenditures. So before you adjust anything else, first finalize the profit of this business, no? So if there is a business, you have to finalize the profit of this business. So the profit of this business cannot be finalized till the time you don't adjust the depreciation of that business. Till the time you don't, adjust the capital expenditure on scientific research. Till the time you don't adjust the capital expenditure on family planning, 1/5 amount. Do you remember? So first thing you are supposed to do from the current year business income, meaning business income minus business expense, business profit. From that profit, you are supposed to first and foremost adjust current year depreciation, then current year capital expenditure on scientific research, then current year capital expenditure on family planning, 1/5 amount. Yes or no? Now after doing this, no, some business profits will remain. Now after doing this, some business profit will remain. Now from that business profit, which is for the current year, will you adjust the current year losses first or the brought forward losses first? Always the current year losses should be adjusted first. Losses of other heads will be adjusted first or the losses of the same head will be adjusted first. So next will be current year business losses. Any other business loss you are having, you adjust against the profit now. Now whatever profit remains, from that profit you adjust current year losses of other heads. Yes or no? But the loss should be for the current year only. Yes or no? So now adjust current year losses of other heads. Now after doing this, still your profits remain. Now you can set off the losses of earlier years. Now you can set off the brought forward unabsorbed depreciation. Now you can set off the brought forward capital expenditure on scientific research, unabsorbed capital expenditure, etc. Yes or no? Now tell me, do you remember unabsorbed depreciation 32.2 we have done? Unabsorbed depreciation of any year can be set off in that year only against any business income or any other head except salary. If not done, can be carried forward to subsequent year. In the subsequent year, they can be set off against any income of the subsequent year, any business income or any other head income except salary. If not done, then it can be carried forward for indefinite period. And that is the same treatment which you are supposed to give to unabsorbed capital expenditure on scientific research, unabsorbed capital expenditure on family planning. Do you remember that? That we have already done under the PGB period. Now tell me, do you know after the carry forward, the business loss can be set off only against business income. It cannot be set off against any other head. Yes or no? And if it cannot be set off right now, it can be carried forward to the next year. And from the next year business income, it will be set off. But it will be set off only against business income. It cannot be set off against any other head. And its carry forward is not indefinite. Its carry forward is limited, 8 years. Now you have a business income. See, still your business income is remaining. Now you have the option to set off brought forward business loss of earlier years. Now you have the option to set off brought forward unabsorbed capital expenditure. So earlier year business loss you will set off first, or earlier years unabsorbed capital expenditure, unabsorbed depreciation you will adjust first. What you will adjust first? See, if you will adjust the unabsorbed depreciation, no, earlier years unabsorbed depreciation, if you will adjust first, even if there was no business income, it could have been adjusted against other incomes except salary. But what if you have adjusted the unabsorbed depreciation right now from your business income and the business income goes 0? Now, even if you are having the brought forward business loss, it cannot be adjusted against any other income of the current year. What if there are no business income in the future? This loss will be lapsed because it is allowed only for 8 years. So will it be better to adjust that loss first, whose carry forward is limited, against this income only it is allowed, and its carry forward is limited? Will you adjust that loss first, or you will adjust the unabsorbed depreciation first? Definitely, if the business income is available, from this business income only, the brought forward business loss can be set off If this business income is not there, the brought forward business loss cannot be adjusted against any other income. And what if this business income is not there? Can you set off the brought forward business loss against this year's any other income? No. So try to adjust that business loss first. No. Why are you trying to adjust the unabsorbed depreciation first? Even if there is no business income remaining in this year, still your unabsorbed depreciation will be eligible to be set off against any other heads except salary. And if not, no, it can be carried forward for indefinite period. It will never lapse only. So why are you in a hurry to set off that unabsorbed depreciation? Be in a hurry to set off your brought forward business loss. It should be given the first priority. Hello, sir. So now if current year any business profit remains, okay, so now there are no current year adjustments to be done. All the current year adjustments done. Now brought forward losses are to be adjusted. So which loss should be adjusted first? Unabsorbed depreciation of earlier years or business loss of earlier years? Business loss of earlier years, because that can be adjusted only against this income. And if could not be adjusted right now, its carry forward is only for 8 years. What if this was the 8th year, last year? It will lapse, no? So always try to give the priority to business losses, brought forward business losses. Yes or no? So now what will you adjust? Come on. Brought forward business losses. Then profit remains. Then brought forward unabsorbed depreciation. Then brought forward unabsorbed capital expenditure. On what? Scientific research. Then brought forward unabsorbed capital expenditure on family planning. See, the brought forward business losses, they're also oldest first. You have two losses. One loss is 7 years old and one business loss is 4 years old. Which loss you will adjust first? The oldest first. Because if you will not adjust it right now, it will lapse early. So oldest business loss you will set off first. Then the newest business loss. But business losses will be adjusted first. Yes or no? And after setting off the business losses, if there is some business income remaining, only from that business income unabsorbed depreciation. So what if the business income does not remain? Then don't worry. Unabsorbed depreciation, unabsorbed capital expenditure on scientific research, family planning can be adjusted against this year's any income except salary. And if there are no incomes, no, they can be carried forward for indefinite period. This is the order of set off. You have to completely maintain this only. Don't try to switch the set off. Okay, I'll do this first, I'll do no. Exact same order you are supposed to follow in order to get the maximum benefit and as per the legal provisions. This should be the best option. Right or no? So first priority, from your business income, current year depreciation. Then current year capital expenditure on scientific research, current year capital expenditure on family planning to the extent of 1/5 only. Yes or no? Then current year losses to be adjusted. Current year business losses, because that is under the same head, has to be adjusted first. Then current year other losses, other heads losses. Yes or no? Then whatever profit remains, whatever business profit remains, from that business profit you set off brought forward business loss, oldest loss first, then newest. Yes or no? Then brought forward unabsorbed capital expenditure on scientific research, brought forward unabsorbed capital expenditure on family planning. And now still some business profit remains. This will be your taxable business profit for the current year. After setting off all these things. Getting my point, everyone? Will you remember this sequence? Have you written it? So this was your business loss, my dear friends. Okay. Now coming to 73. Do you have a speculation loss? Same year, under the same head, from any other speculation business? There was no speculation business. So, under the same head, it cannot be set off against any other business income, or interhead is not possible. So, 73 says you can carry forward your speculative business loss. So, this year's speculation business loss cannot be set off, then carry forward them to subsequent year. In subsequent year, if you will have speculation business income, from that speculation business income you can set off. Yes or no? But wait, what if in the subsequent year you don't have a speculation business income? Then from that year, any other income you can set off? No, only speculation business. Yes or no? And maximum carry forward is how many years? 4 years. Only 4 years, huh? Remember this. Speculation business loss is done. Now specified business loss. Can you see specified business loss? Current year what you do? Current year you set off against only specified business income. Can you set off against other business incomes? No. Can you set off against other heads? No. Meaning that if there is no specified business, you cannot set off against other business income, you cannot set off against other heads, you have to carry forward. So you can carry forward as per 73A. After its carry forward, in the subsequent year, it will be set off from specified business income only. What if in the subsequent year specified business income is not there? Can you set off against other incomes? No. Only specified business incomes. Yes or no? You can carry forward for how many years? Indefinite period. There is no restriction of 8 years. There is no restriction of 4 years. Indefinite period, your specified business losses can be carried forward. Yes or no? Will you remember section 73A? Then 74, capital losses. Do you have a long-term loss? Can be set off in this year against long-term gains only. What if there is no long-term gain? Can it be set off against short-term gain? No. Can it be set off against other heads? No. 74 say carry forward. After carry forward in the subsequent year, if you will have long-term gain, from that only you can adjust. Hello sir. But what if you don't have a long-term gain? Can you set off against other incomes? No. Not even against short-term gain. Forget about the other incomes. Yes or no? You can carry forward for how many years? 8 years. Within next 8 years, whenever you will have long-term gain, from that long-term gain only it can be set off. Yes or no? 8 years. Can you have a short-term loss? Same year, it will be set off against short-term gain or long-term gain. But what if there was no short-term gain, no long-term gain? Then can it be set off against other heads? No, because long-term and short-term capital losses cannot be set off against other heads. No. So your short-term loss cannot be set off in this year against other heads. So 74 says you can carry forward the short-term loss also. In the subsequent year, if you will have short-term gain, from that you can adjust. In the subsequent year, if you will have long-term gain, from that you will set off. Yes or no? But what if there is no short-term gain, no long-term gain in the subsequent year? Can you set off against any other incomes? No. You can set off only against short-term gain or long-term gain. If not there, you can carry forward to subsequent year. Likewise, for how many years the carry forward is allowed? 8 years. Will you remember this? This was section 74. Now coming to 74A, which says that loss from an activity of owning and maintaining racehorse. Same year, from the same activity income you can set off. Can you set off against other incomes of other sources? No. Can you set off against other heads? No. So what if you are not having such type of income? It cannot be set off against other sources income also and other heads income also. Then 74A allows you to carry forward. After its carry forward, it will be set off only against the income of such type of activity. Yes or no? So in the subsequent year, if you have such type of activities income, against that only you can set off. What if you are not having any income, any such type of income? Then can you set off against any other incomes? No. Carry forward to the next year. In the next year, if you will have such type of income, from that income only you can set off. Likewise, you can carry forward for how many years? 4 years. So now see, 4 years applicable for two cases. Loss from an activity of owning and maintaining a resource and speculation losses can be carried forward for maximum 4 years only. Hello? all the losses for 8 years except two losses. Unabsorbed depreciation can be carried forward for indefinite period. Specified business losses can be carried forward for indefinite period. Yes or no? But all other losses for 8 years. House property loss, 8 years. Normal business loss, 8 years. Long term loss, 8 years. Short term loss, 8 years. All the losses, 8 years. Indefinite period, 2 losses. Unabsorbed depreciation and specified business loss. 4 years. 4 years, speculation business loss and loss from an activity of owning and maintaining resource. See, the year in which you have carried forward the loss of an activity of owning and maintaining resource, no, in that year, that activity shall also be in existence. So in the next year, if you have carried forward the loss of this activity, in the next year, this activity should be in existence. Only then this loss will be carried forward and will be set off in the next year. Next to next year, if you have carried forward this loss, in that year, this activity must be there in existence. Only then this loss will be carried forward to next year and will be allowed as a set off in that year. But there was no requirement, such requirement in case of business. There was no such requirement in the case of house property. Hello, sir. Understanding? Everyone? So this was your carry forward provisions. Now, very important thing I will tell you. Please remember this. See, this is your previous year 24-25. In 24-25, no, loss is computed for the first time. Meaning, the loss relates to 24-25. Which loss is computed? House property loss, business loss, or capital loss, or specified business loss, whatever loss you are talking, that loss is calculated for the first time in this year. Now, do you want to carry forward these losses to the subsequent years? Carry forward to subsequent years? Do you want to carry forward? Because in this year, these losses cannot be set off. Under section 70, under section 71, these losses could not be set off. So now you want to carry forward these losses to subsequent years so that they can be set off in the subsequent year's income. Yes or no? As per 71B to 74A. Do you want to carry forward these losses to subsequent years? Yes. Do you want to set off in the subsequent year? So for that you will have to carry forward to the subsequent year. No. So carry forward to subsequent years allowed only if ROI of the previous year 24-25 is filed on or before due date. So what is the due date of ROI? Due date can be 31st July also of the assessment year, or due date can be 31st October of the assessment year. Due date can be any of these due dates, no? Return filing due dates, yes or no? So see which due date is applicable to you. For example, for you, the due date applicable is 31st October. So you have to file your return for this year on or before the due date. And in that return, you are supposed to show that in this year, my income is this. This year, I have calculated these losses for the first time, which I want to carry forward to the subsequent year. Then that return is known as loss return. Meaning the return in which you show the losses of that year, which you have calculated for the first time, which you want to carry forward to the subsequent year. That return is known as what? Loss return. And if it is filed on or before the due date of filing ROI, only then these losses which you are showing in the return can be carried forward to subsequent years. Understood or not? If you file the return on 25th of July, meaning before the due date only you file, no? Can you carry forward the losses of this year to subsequent years? Yes. Carry forward. What if you have filed your return on 30th of November? After the due date you have filed. Wow. Now forget about the carry forward of these losses. The losses of this year cannot be carried forward. Hello? If you want to carry forward the losses of this year, which you have calculated for the first time in this year, you want to carry forward to the subsequent years, no? Will be allowed only if the return of this year is filed on or before the due date. And in that return, you have shown these losses to be carried forward to subsequent years. Yes or no? But this restriction will not be applicable in case of loss from house property and unabsorbed depreciation. So even if you don't file your return for this year on or before the due date, still you can carry forward these two losses. There is no restriction. Which losses? Loss from house property and unabsorbed depreciation. Will you remember this? Now, I would like to ask you one question. Is this restriction only for carry forward for the first year? Yes. This restriction is only for carry forward of the losses for first time. Meaning that, wait, earlier years some losses were there. I'm talking about 23-24. Did you have some losses for 23-24? Yes. Which you could not set off in that year. You carried forward those losses in this year. Possible? And you were able to do it only if you filed the return of last year on or before the due date. So last year your return you have filed on or before the due date. Hence you have carried forward those losses to this year. Now these losses will be set off in this year. And if in this year they cannot be set off, they will be easily carried forward to the next year. Their set off and their carry forward will not be stopped just because this year's return is not filed on or before the due date. Once the loss of earlier years has been carried forward to this year, their set off in this year will happen and their subsequent carry forward will also happen because they are the loss of the year for which the return was filed on or before the due date. So their carry forward is done, their set off will also be done, and if they cannot be set off, their further carry forward will also not stop. Yes or no? But the loss of current year will not be carried forward. Current year losses can be set off in current year under section 70 and 71. Yes, that will also not be affected. If your current year return is not filed on or before the due date, it will not affect the set off in the current year. Current year section 70, current year section 71. Losses can be adjusted within the head also, head to head also. That will not be affected. But if this year losses cannot be set off in this year, their carry forward in the subsequent year will not happen. Because this year return is not filed on or before the due date. Will you remember this? Did you understand? Sure. This year loss you carry forward to next year. How? You filed the return for this year on or before the due date. So losses carried forward. Now these losses will be set off in the next year. These losses will, if not set off in next year, then will be carried forward easily. Even if next year's return is not filed on or before the due date. Next year's losses will not be allowed to be carried forward. Getting my point? So this year loss will be carried forward to next year? Yes. To do that, file return on or before the due date. If you file the return for this year on or before the due date, carry forward the losses. It is applicable only for first year carry forward. First year carry forward, that's it. This restriction is not applicable for set off in the current year. Set off will happen. Hello? Even if this year's return is not filed on or before the due date, it will not affect the current year set off. And it will also not affect the losses which are brought forward. Their set off will also happen. And their further carry forward will also happen. That will not be affected. Getting my point? Only the current year losses will not be allowed for carry forward. And this restriction is applicable for all losses. business loss, speculation business loss, specified business loss, capital losses, loss from an activity on owning and maintaining resource. But this restriction is not applicable for these two losses. Loss from house property, unabsorbed depreciation can be easily carried forward even if the return is not filed on or before the due date. Done, sir? Sir, done, sir? So this was your other important points I have already discussed with you. Okay. This point number 1, I have already discussed with you. I was discussing this point number 2 with you right now. This point I have discussed, entire point. Now this brings to an end the notes to this chapter. Theory is over. Easy, no? Okay. Now one by one we'll solve the questions. We'll see that how much we have learnt. Okay. Please remember each and everything which I have told in the class today. Okay. Please remember each and everything. Everything will be relevant while solving the questions. And you will see the questions are so easy, so easy. But if you commit a silly error, that easy question you will not be able to crack. And trust me on this, guys. A simple question for 6 to 8 marks minimum comes from this chapter. Very simple question. I'll tell you also that, see, this was your exam question. Okay. So let's come to ICS study mat. Chapter number 5. Okay. So in your chapter number 5, there are many questions, in set off and carry forward. We are going to solve all the questions one by one. Okay. So come to illustration number 1. Can you see illustration number 1? Mr. A, aged 35 years, submits the following particulars pertaining to the assessment year 25-26. His income from salary is computed. You don't have to do anything, they have computed. Loss from let out property. Okay. Next one is business loss, 1 lakh rupees, and bank interest FD received 80,000. So this is his income from other sources. Compute the total income of Mr. A for the assessment year 25-26, assuming that he has exercised the option of shifting out and he is under the default tax regime, meaning that he is following 115 BSE, he is not following 115 BSE. Okay, no? So see, here I will say that he is not following 115 BSE. 115 BAC he is not following, and here I will write he is following 115 BAC. Okay, no? If he is following 115 BAC. Now, if there are any changes, the change is only for set off of house property loss. There is no change anywhere else. Okay. So if I don't follow 115 BSE, I will follow normal things. Can I set off my house property loss from salary? Yes. Can I set off my house property loss from my other sources also? Yes. I can set off my house property loss from any head, but to the extent of maximum 2 lakhs. But wait. If I set off my house property loss from my other sources, what will happen? Other sources income will vanish. Now, even if business loss is there, the business loss cannot be set off in that case. Because the business loss can be set off against any head except salary. So, if I have the option to set off the house property loss against salary, I will choose that option and I will set off my house property loss against salary, no? Yes or no? I will save my other sources income so that my business loss can be set off against that. Yes or no? So what I will do, from my salary, 4 lakhs, I will set off my house property loss. But the loss was 2,20,000. Can I set off my house property loss against any head? Yes. Against salary also? Yes. But to the extent of maximum 2 lakhs. So I will set off 2 lakh rupees of house property loss against my salary income. Now my salary income remaining will be 2 lakhs. Now tell me, will I still have 20,000 rupees of house property loss available with me? Yes. Now this cannot be set off against any other head because up to 2 lakh I have set off. Now this remains, no. This I will carry forward. So what I will do? I will carry forward my 20,000 rupees of house property loss. I will carry forward my 20,000 rupees of house property loss. And this carry forward will happen as per section 71B. Now tell me, how much is the taxable income under the head house property? 0. There was a loss which I have set off and there is no taxable income under the head house property. So house property head will be nil. Do I have PGBP? Yes. PGBP I have 1 lakh rupees of loss. Can I set off that 1 lakh against my 80,000? Yes or no? So now under the head PGBP I don't have any income, any taxable income. Under the head PGBP I have a loss of 1 lakh. And that 1 lakh I will set off against other sources. Yes or no? But can I set off fully or only to the extent of 80? So this 80 will vanish and 1 lakh, out of this 1 lakh, 20,000 will still remain. So for me, my salary income is 2 lakhs, my house property income is nil, my PGBP income is nil. Do I have any capital gains? No, capital gains also nil. IFOS I had 80,000 FD interest. Against that I am setting off my 1 lakh rupees of business loss. Yes or no? And by setting off, the taxable IFOS income remains nil and 20,000 loss still remains. Did you understand? That 20,000 loss, this was my house property loss which I carried forward as per 71B, and this was my normal business loss. Normal business loss which I will carry forward as per section 72. Okay, but to carry forward this loss, my return for this year must be filed on or before the due date. But to carry forward that 71B loss, house property loss, there is no requirement to file my return on or before the due date. Yes or no? So now tell me, do you have all the heads income? Yes. Salary head 2 lakh, house property nil, PGBP nil, capital gain nil, and IFOS also became nil. So how much is your total income now? Do you have 2 lakh rupees of total income? And this 2 lakh will be your total income if you don't follow 115 BAC. Now, on the right hand side, if you follow 115 BAC, I will change the color so that you come to know that the calculations are separate. Okay? Come, tell me. Do I have 4 lakh rupees of salary income? Yes. Now, I cannot set off this 2,20,000 loss to the extent of 2 lakh. It was available. Yes or no? So, what I will do, here I will write 2,20,000. This was my loss from house property cannot be set off up to 2 lakhs against any head and also not allowed to be carried forward since I am following 115 BSc. Yes or no? So from your salary, now it will not be adjusted. Now that 2,20,000 entirely will lapse. It will lapse. So if you are ready that your house property loss should lapse, follow 115 BSE. Pay tax on 4 lakhs. Now tell me, what will be your taxable income under the head salary? 4 lakh. No loss set off. What will be your taxable income under the head house property? Nil. What will be taxable income under the head PGBP? It will be nil, because PGBP is having a loss. And that loss very well I can set off against my IFRS. Yes or no? To the extent of 80. There is no restriction even if I follow 115 BSE. Sir, tell me, what will be my capital gain? It will be nil. What will be my IFRS? It will be 80,000. But against that, will I set off my 1 lakh rupees of business loss? Yes, sir. Now, after setting it off, my taxable income will be nil. But do I still have 20,000 rupees? Wait, huh? Do I still have 20,000 rupees business loss? So now this 20,000 rupees of business loss which remains, this is my normal business loss, will be carried forward under section 72. So only change happened where? In the case of house property loss. Rest everything is same. Can you see? So what will be my taxable income here now? Now what will be my total income? Come on, tell me. It will be 4 lakhs. So if I don't follow 115 BSE, my total income is 2 lakhs. And if I follow 115 BSE, my total income is 4 lakhs. They have not told you, tell us which one is better. So don't try to act over smart. Okay? No need to tell them which one is better. Tell them that this is the total income, this is the total income. That's it. You will not get extra marks for over smartness. If the examiner is, angry, he'll cut the 2-3 marks for your over smartness. See, 2 lakh, I also got 2 lakhs. The presentation you will do in the same manner in which they have done. Okay, no? But no need to write down all these big notes. Write down everything in very short. Okay, these big notes institute always gives in the study mat, so that the people who are doing the self study, they should know what is exactly happening for them to read. But in our main solutions, we are not supposed to write down this much big notes. Wherever necessary, write down notes, but very small, short and sweet notes. Okay. Now coming to question number 2. Question number 2. See, if you have an option to set off short-term loss against long-term gain as well as short-term gain, against which you will set off first? Short-term loss can be set off against short-term gain also. It can be set off against long-term gain also. So against which gain you will set off your short-term loss first? Always against short-term gain. Because if you will set off against long-term gain will vanish. Now what if you have a long-term loss? Will you be able to set it off against short-term gain? No, na. So always short-term against short-term first. Long-term against long-term first. After setting off long-term loss from long-term gain, if still long-term gain remains, from that still your short-term loss can be set off. Getting my point, sir? Okay, now tell me. Mr. B is a resident individual, furnishes the following particulars. Income from salary computed, income from house property, positive or negative? It is negative. So there is a loss of house property. Income from non-speculative business. Non-speculative business means normal business. Okay, no? And income from speculative business, negative 4,000. Short-term capital loss you are having. Long-term capital gain you are having. Okay. What is the total income chargeable to tax? Very easy question. Very easy. Assuming that pays tax under 115 BSE, meaning 115 BSE followed. If 115 BSE followed, no. your long-term loss cannot be set off against any head to the extent of 2 lakhs. But see, your house property loss cannot be set off. Your house property loss cannot be set off against any head to the extent of 2 lakhs. Yes or no? But that house property loss can be still set off within the head. There is no restriction on set off within the head. Restriction only if you set off against other heads. Yes or no? So do you have any other house property income? The answer is no. The entire loss you tried to set off within the house property head, which you could not set off. Now this is a loss of house property head. To the extent of 2 lakh, it was available for set off. But you cannot set off against any other head also because you are following 115 BSE. So can I say this 24,000 loss not allowed to be set off and carried forward. So ignore this loss now. You will give a note that since the assessee is following 115 BSE, hence the house property loss which was available for set off against any head to the extent of 2 lakhs amounting to rupees 24,000 has not been set off. It is ignored. Full stop. Will you be able to write down this note? Okay, very good. Now you have a non-speculative business loss. This is a loss of your normal business. So can your normal business loss be set off against your salary income? No, no chance. Can your speculation business loss, can it be set off against can it be set off against salary head? No. Can it be set off against long-term capital gains? No. So definitely this 4,000 of speculation business loss you will carry forward under section 73 provided you file your return on or before the due date. Done? No sir. Now let's talk about short-term capital loss. 25,000 short-term capital loss you have. Can you set off that loss against your long-term gain? See, wait, your normal business loss also you can set off against long-term gain, but not before the inter-source set off of that head. Yes or no? First you will set off what? The short-term loss against long-term gain. Then if long-term gain remains, against that you can set off your normal business loss. Yes or no? If you will set off your normal business loss against capital gains, hello, will there be any capital gains remaining to set off your short-term loss? No, na? Then you will have to carry forward that. First what we do, first we finish the head. Then from that head whatever income remains, from that income, other head loss can be set off. Now you have a house property, now you have a PGBP head loss amounting to 22,000 from a normal business. That can be set off against long-term capital gain. That can be set off against capital gain head. But first finish the capital gain head, no? Now tell me, can you set off your short-term loss against long-term gains? So this will wipe out and this will still remain. How much? 6,000. Can I say now this 6,000 rupees of short-term capital loss cannot be adjusted against any head? And this 22,000 rupees of business loss also cannot be set off against any head. Salary is there, but against salary you cannot set off these two losses. So this will be carried forward under section 72 and this will be carried forward under section 74. So what will be your total income chargeable to tax for this year? Only rupees 45,000 because all the heads are gone. So only the salary income remains. House property nil, PGBP nil, capital gain nil, IFOS nil. So how much is your total income? 45,000. And which are those losses for this year which are eligible for carry forward? Number one, 22,000 business loss. Number 2, 4,000 rupees speculative business loss. Number 3, short-term capital loss 6,000. you will give a list in the note saying that these losses cannot be adjusted in this year, will be eligible for carried forward under these sections provided the return of income for this year is filed on or before the due date. Finish. Very difficult question, no sir? Hello? Difficult? Made easy, sir. If you are having a loss in house property in 23-24, which you have carried forward in this year, you are following 115 BSc in this year. Okay, so you are ignoring. No, you are not supposed to ignore that. Whatever brought forward losses are there, they are supposed to be set off against your current year's house property income. Hello, sir. But the current year loss, which was supposed to be set off against other heads to the extent of 2 lakhs, that will not be allowed. Its carry forward will also not be allowed. The losses which you have brought forward and they will be set off against your current year's house property income. Current year house property loss will be set off against current year house property income. Brought forward losses of house property will be set off against house property income. There is no restriction on that. But the current year house property loss which you were setting off against other heads to the extent of 2 lakhs, that will not happen. And if you cannot do that, you cannot carry forward also. Current year house property loss, they are talking. Done? Next. Question number 2 done. See, this is your final income, 45. Now coming to question number 3. See, very difficult question. Huh? This is also very difficult question. Let's do now. During the previous year 24-25, Mr. C has following incomes and brought forward. See, now they are talking about brought forward losses. See, if you have short-term losses of earlier years which you have brought forward in this year, can it be set off against this year's short-term gain and this year's long-term gain? Yes or no? Short-term loss of earlier year you have brought forward in this year. Can it be set off against this year's short-term gain? Can it be set off against this year's long-term gain? Yes. But before doing that, current year set off must be done. So whenever you have brought forward losses, before setting them off, always complete the current year set off first. Then only brought forward losses are given effect. Understanding? So you are fortunate. There are no current year losses to be set off. So whatever brought forward losses are there, can you adjust directly from these gains? Yes. So your short-term loss can be set off against short-term gain as well as long-term gain. Against which you will set off? You will set it off first from short-term gain. And if some loss remains, that can still be set off against long-term gain. But for that, long-term gain should remain after setting off the long-term loss. Yes or no? So do you have a long-term capital gain? 75,000. Do you have a long-term capital loss? 96,000. So if you set off this against long-term gain, entire long-term gain will vanish. So how much will still remain? 21,000 of long-term capital loss will still remain. Can you set it off against short-term gain? Can you set off the long-term loss against short-term gain? No. So you will directly carry forward. Will it be carried forward? See, this loss was for assessment year 23-24. Whenever assessment years are given, no, always convert those assessment years to previous years to avoid the confusions. So assessment year 23-24, meaning which previous year? Previous year 22-23. So the long-term loss was for which year? Previous year 22-23. So this loss was for previous year 22-23. Carried forward for the first time in previous year 23-24. Loss of 22-23 will be carried forward for the first time in which year? 23-24, no. Then second time 24-25. This is the second year in which the loss is coming. Can it come to second year? Yes. Can it be set off in the second year? Yes, against only the long-term gain. If done, then okay. If still remains, can it go to third year? Yes, it can be carried forward for 8 years. This was the second year in which you have brought and set off to the extent of 75. Still 21 remains that can be carried forward to the third year. Yes or no? So can you carry forward? Yes. Under section 74. Now tell me, do you have a short-term capital loss? Yes, 37. Entire 37 you can set off against 1,50,000. Now see, 37 if you set off against 1,50,000, so 1,50,000 minus 37, 1,50,000 minus 37 will give you 1,13,000. Still there is 1,13,000 of short-term capital gain remaining. Against this you cannot set off the long-term loss. Hence you are carrying forward. Hello sir. Will you remember this loss was for which assessment year? Assessment year 24-25, meaning previous year 23-24 loss was there. So previous year 23-24 you had a short-term loss. You have carried forward that loss to first year 24-25. In this year, can it be set off? Yes, it can be set off only against short-term gain. No, against short-term gain also, against long-term gain. But it was fully set off against short-term gain. Still some short-term gain remains. Against that, the long-term loss cannot be set off. Yes or no? Now that long-term loss will be carried forward. So what will be the total income for this year? 1,13,000. This will be your total income. Hello sir. 1,13,000. Did you all understand? 3 questions. Now coming to the question number 4. Okay. Now in the question number 4. Income from the activity of owning and maintaining racehorse, 75,000. Income is there, loss is not there. Against this income, the income of normal sources can be adjusted, but loss of this activity can be set off against profit of this activity only. Hello sir. Now tell me, income from textile business you are having 85,000. Brought forward textile business loss relating to assessment year 24-25, meaning which previous year? Previous year 23-24. The loss was for 23-24. It is carried forward for the first time in the first year 24-25, previous year 24-25. Yes or no? Now in this year, this loss can be set off only against business income of the current year. But wait, before setting off this loss against the current year business income, you are supposed to first prioritize current year depreciation, current year capital expenditure on scientific research, family planning, then current year business loss, then current year other losses. Once you are through with that, only then this business loss which you are bringing forward will be adjusted against your business income. Yes or no? Now, brought forward loss from an activity of owning and maintaining racehorse relating to assessment year 22-23. Be very careful. Assessment year 22-23 means previous year 22-23. So the loss of this activity for previous year 21-22. 21-22. First year carry forward, previous year 22-23. Previous year 23-24. Hello. Third year, previous year 24-24. 24-25. Can it come to the third year? Yes, it is coming to the third year. In the third year, do you have any income? Loss from an activity of owning and maintaining racehorse? Yes, you have that income. From that it will be adjusted. But wait. If you have IFOS had other source loss, that loss will be first adjusted against. Current year loss will be first adjusted. Only then the income of that activity remaining, from that the brought forward loss can be adjusted. Yes or no? But you are very lucky. Current year other source loss is not given. So under the head IFOS, only this income is there. Against that you can set off this loss. So 96,000 will be adjusted against 75. 75 will vanish and still you will have 21,000 of loss. What will you do with this? Was this the third year? Hello? This loss came for the third year, no? Can it be carried forward to the fourth year, next year? Yes. If I would have been your examiner, no? What I would have done, I would have written assessment year 21-22. Then this is the fourth year. And in the fourth year, it is getting set off. Still 21 remains. Now that 21 will not go to the next year. It will lapse. Because this was the last year. Understanding? But will this 21 go to the next year? Yes, because next year will be the fourth year. Okay, no? So you will carry forward this loss under section 74A to the next year. Now wait, do you have 50,000 of brought forward textile business loss? Yes. So before adjusting it against the business income, ask yourself, do you have current year depreciation? No. Do you have current year capital expenditure on scientific research, capital expenditure on family planning? No. Do you have current year losses, business losses? No. Do you have current year other losses to be set off against business income? No. Now you can set off this loss against your business income. Entire 50 will vanish and 85, against that 85 it will be set off. 35,000 will be your remaining PGBP income. Yes or no? So do you have salary? Nil. You have house property? Nil. You have PGBP? Yes, taxable PGBP income remaining 35,000. Yes or no? Now, do you have capital gain? No. Do you have other sources? No. So your total income will be 35,000. Yes or no, sir? Okay. Now, illustration number 5. Shall I start? Fifth illustration. Now Mr. E has furnished his details for the assessment year 25-26. Income from salary 1,50,000. Very good. Income from speculation business 60,000 positive income. Huh? Income from non-speculation business. Can you set off your normal business loss against your speculation business profits? Yes. So do that. 40,000 you will adjust from 60. 20 will still remain. Hello sir. 20 will still remain. Now, do you have any other business loss? No. So business head is done. So your salary head is 1,50,000, house property head nil. You have PGBP head positive income 20,000. That positive 20,000 is your PGBP head income. Yes or no? From speculation business. Now you have short term capital gain of 80. You have long term capital loss of 30. Do one thing, my dear friends. This 30 long-term capital loss cannot be set off against short-term gain and it cannot be set off against other heads also. What you will do, directly carry forward. Under which section? Under section 74. So this year, one loss you identified which cannot be adjusted in this year, that you will directly carry forward. Okay, no? So do you have short-term capital gain? Yes. Do you have winnings from lottery? Yes, 20,000. Compute the total income. Now, what computation of total income? Do you have income from salary? Yes, sir. 1,50,000. Do you have house property? Yes, sir. Nil. Do you have PGBP? Yes, sir. 20,000 PGBP income still remains from speculation business. But this is not taxable at special rates. This is a normal rate income only. Just like your other PGBP incomes are taxable at normal rates, this income is also taxable at normal rates only. Okay, no? Okay. Now tell me, do you have capital gains? No. Capital gains? Yes, you have 80,000. 80,000 short-term capital gain. This is also taxable at normal rates. Because this is not a short-term capital gain under 111A. Hello? Is it your normal total income? Is it your normal short-term capital gain? Yes. So normal short-term capital gain taxable at what rate? Normal rates only. No, we have just now done 2 days back tax rates. Do you remember? Hello sir? If STT paid equity shares were there, on that the short-term gain was there. Only then that short-term gain would have been 111A. Other short-term gains always normal rates, no? Okay. Long-term capital loss done. Winnings from lotteries. Do you have other sources? Yes. Only one other sources. 20,000. So now can you calculate your total income? 190 and 270. 2,70,000 will be your total income. Friends, are you getting 2,70,000? Please check. Done, sir. Now in this question, if they tell you to calculate the tax liability, tell me what is the total income? 2,70,000 only, no? Now you apply the tax rate on this only. Assuming that you are not following 115 BSA. Normal rates will be applicable. Do you always apply the normal rates on the entire total income? Or you split it into two parts? Out of this, some income is special income. On that, you pay special rates, no? So, do you have winnings income? Do you have winnings income there in the total income? On that, will you apply the normal rates? Or you will apply the special rates? Why do you forget all these things? Hello? So, from this, how much is winnings? Pay attention, pay attention. Still, you are not going to do the correct answer. I'm sure, 100%. Wait. Okay. From this, how much was the winnings? Under section 115 BB, 20,000 was winnings. Okay, no? Now you are very lucky that the balance total income is only 2,50,000. And you are not told that you are following 115 BSc. If you were following 115 BSc, your basic exemption limit would have been 3 lakhs. 3 lakh is higher basic exemption limit, 2,50,000. Still unexhausted basic exemption limit 50,000 remaining. Can that be adjusted against short-term gain 111A? Yes. Can that be adjusted against long-term gain 112, 112A? Yes. Can that be adjusted against winnings? No. So even if unexhausted basic exemption limit was there, that cannot be adjusted against winning. Against on the winnings, you are supposed to compulsorily calculate the tax. Hello, sir. But here we are assuming that assessee is not following 115 BSc. Or do you want me to follow 115 BSc? Let us follow 115 BSc. Okay, no? We are assuming that assessee is following 115 BSc. So if 115 BSc is followed, then basic exemption limit is 3 lakhs, no? Now tell me, 3 lakh rupees is basic exemption limit, meaning 50,000 basic exemption limit is still unexhausted basic exemption limit. Okay, can it be adjusted from here? Adjustment possible or not possible? Not possible. If there was short-term gain 111A, long-term gain 112, long-term gain 112A, against that only this can be adjusted. It cannot be adjusted against winnings. So on your balance total income, which is below the basic exemption limit, are you going to pay any tax over here? No. So here your tax will be nil. Here your tax will be nil. But on your winnings, now on the entire winnings, you are supposed to pay tax at the rate of 30%, no? So calculate 30%, you will get 6,000. This is the tax on your winnings income. This is the tax on your winnings income. So this tax plus this tax, add both of them. You are supposed to add both the taxes. So can I say tax on total income you are supposed to get 6,000 plus nil. How much you are getting? 6,000. Okay. You are getting 1,000 rupees rebate. Now, is your total income more than 5 lakhs? Check this total income. Are you a resident? Yes. Individual? Yes. Your total income is up to 5 lakhs? Yes. Can you claim rebate? Yes. So rebate of any tax can be claimed except LTCG 112A. Is it LTCG 112A tax or any tax? Any tax can be claimed as rebate. Even the tax on winnings can be claimed as rebate. No problem in that. Yes or no? So less rebate. How much? Either the entire tax or maximum 12,500. If you will take it, you are gone. You are supposed to take 25,000. Why 25,000? Because you are following 115 BSc. In 115 BSc, you don't check 5 lakhs also, you check 7 lakhs. So your total income is less than equal to 7 lakhs. Entire tax you can claim as rebate, but to the extent of 25,000. Yes or no? Since you are following 115 BSc. Okay. Understanding or not? Okay. Now, tell me how much rebate you will get. 6,000, entire 6,000 you will get it as rebate. So can I say this will be nil? Tax on total income after rebate under section 87A will be nil. Can you add health and education cess at 4%? Take nil. Your gross tax liability will be nil. Sir, why are you doing this? I'll come. I'll tell. Tell me what is the amount of your winnings? 20,000, no? Winnings from lotteries. Is it more than 10,000? Don't you think the person who has paid you this winnings would have already deducted TDS 30%, and you would not have been given 20, you would have been given only 14,000 net winnings. Do you remember winnings I told you? IFO said from winnings the TDS is deducted if the winnings amount is more than 10,000. 194B, 194BB, 194B TDS is deducted on all the winnings. 194BB TDS is deducted on horse race winnings. If the amount of winnings is more than 10,000, then the person paying you that winnings will always deduct TDS under 194B, 194BB at the rate of 30%. So if your winnings is 20,000, definitely in your hands you would not have received 20. In your hands you would have received 14 only. 6,000 would have been deducted as your TDS. So 6,000 plus 14,000, 20,000 you are supposed to show taxable, which you are showing gross amount. But don't you think from that 6,000 TDS would have been deducted? So from your gross tax liability, the TDS you always take as a credit. So what you will do? Less TDS on winnings. That was 20,000 into 30%. Under section 194B, it would have been deducted. So 6,000 TDS was already deducted. That you reduce. Now you have a refund due. No tax liability. You are supposed to get the refund of 6,000. Kaushik, you understood? See, tax liability calculation. If you forget the flow which I have given you, no, you will not be able to give single correct answer. It is just the beginning. Let me start with the total income. You will come to know. See, this simple calculation you are not able to do. And there is nothing in this which I have not taught you. I have taught you everything. But at correct time, correct things, how you are doing, that is very important. Will you be able to do it like this now? In the next questions, no, be very careful in these things. Because in any of the questions, I can tell you to calculate the tax liability. You have to check the unexhausted basic exemption limit also. You have to check this. You have to follow the same sequence. Don't eat anything from this process. Follow the entire process properly. If nothing is there, write down nil. No problem. But follow the entire process. Don't eat anything from that process. Okay. And also sometimes agricultural income will also come. So you will have to do the partial integration also. which you have forgotten long back. That I will see how you are going to do it. Okay. So did you solve this question, everyone? Understood? Now, next question. Question number. Oh, ayo. All the questions are done. All the illustrations. 5 illustrations done. Very good, sir. Wow, Umang, you are smart. Come to question number 1. Good question. Mark this question important. Good question. Not that important, but it is good question. Okay. Compute the gross total income of Mr. F for the assessment year 25-26 from the information given below. So now they are telling you to compute the GTI. Now see, income from house property is given, computed. You are not supposed to do anything. They have computed the house property head only and given it to you. Income from business before providing for depreciation. Okay. So if there is a depreciation for current year, you will give the effect of that depreciation first before doing anything else. Yes or no? Next one, short-term capital gain on sale of unlisted shares. So this is your normal short-term capital gain, taxable at normal rates. Okay, no? Long-term capital loss from sale of property brought forward from assessment year 24-25. So this loss will be adjusted from long-term gain only. But after setting of the current year long-term gains, current year long-term loss, this loss will be set off. Yes or no? Income from tea business, if nothing is mentioned, no. So we are supposed to put some assumption. We will assume that the tea business is growing and manufacturing of tea as per rule 8. So for this business, what we are going to do? We are going to do 40% PGBP income and 60% agricultural income. 60% will be 72,000 and 40% will be 48,000. Yes or no? So 48,000 will be PGBP and this will be agricultural income. Yes or no, sir? Okay. So now pay attention. Yes, dividend from Indian companies carrying on agricultural operations. So what? Even if it is a dividend coming from that company doing agricultural operation, for you it is a dividend. It is your IFOS only. You cannot call it your agriculture income. Yes or no? Next one. Current year depreciation 26,000. Brought forward business loss incurred 6 years ago. So can you bring that loss in the 7th year? Yes. If it gets set off, then okay. Otherwise, 7th year carry forward. Yes or no? Now see. Do you have income from salary? Tell me yes or no. Do you have income from salary? No. So income from salary will be nil. Do you have PGBP? Do you have a house property income? You have house property, no? 1,25,000. So against that house property, is there any loss eligible for set off? No. So your house property income will be 1,25,000. Now do you have business loss? Yes. Business loss you are having, and before that current year depreciation also you are having. So what you will do? 26,000 you will adjust from 1,35,000. So now out of 1,35,000 you will adjust 26,000, you will get 1,09,000. Now from that 1,09,000, is there any current year loss of any other business? No. Is there any current year loss of other head? No. Now you can set off the brought forward business loss out of that. Yes or no? So brought forward business loss was 45,000. Can you adjust that 45,000? Yes. Hello, sir. So your current year business income will be how much? This after setting of this 45,000 also, it will be 64,000. 64,000 was your business income. Now you have short-term capital gain and you have long-term capital loss. This long-term capital loss you will have to carry forward, because you don't have any other long-term capital gain. Yes or no? If you have any long-term capital gain in this year, against that only this long-term loss which you have brought forward will be set off. Do you have any other long-term capital gain? No. So this long-term capital loss which is brought forward cannot be adjusted. As per section 74, it will be carried forward to the next year, second year. Hello. Income from tea business. So your tea business will have 40% income, 40% business income. That was 48,000. So 48,000 is your business income and 64,000 is also your business income. Yes or no? And do you have agricultural income? Yes. How much agricultural income you are exempting under section 10(1)? It is, sir, 72,000 agricultural income you are exempting. So out of 1,20,000, this 48 you will tax and this 72 you will exempt. Done, sir. Next one, dividend from Indian company. This is your IFRS income, will be directly taxable under the head IFRS. Now, do you have PGBP income? Yes. How much PGBP? 64,000 plus 48,000 will give you 1,12,000. So 1,12,000 is your PGBP head total. Do you have capital gains? Yes, sir. You have one capital gain income of 56,000. Okay. Now tell me, do you have IFOS? Yes. You have IFOS also 80,000. All the incomes you have considered. No income remaining. Add all of them. So 1,25,000 plus 1,12,000 plus 56,000 plus 80,000. You are going to get 3,73,000. This is your gross total income. Do you have any chapter 6A deduction? No. So directly this will be your total income. Yes or no? Now on this total, please check. Your total income is 373 only. In the answers, please check. 373 total income. See, 373. Done, no? Now, if they tell you to calculate the tax liability, how will you calculate? Very easy, sir. Very easy. See, in the question, no, assessee is an individual. Assessee is an individual plus his total income is 3,73,000, which is more than his basic exemption limit, plus his net agricultural income, which is exempt under section 10(1), is also 72,000, which is more than 5,000. If all these three conditions are fulfilled, you are supposed to partially integrate the net agricultural income to calculate the tax liability. So to calculate your tax liability, you follow three steps. In the case of partial integration, do you follow three steps? Yes. Now, first step, take your total income, 3,73,000. In that, add your agricultural income, 72,000. It was only 72 only, no? So 373 plus 72 will give you 4,45,000. Now calculate tax on this 4,45,000. See, we will assume that the assessee is not following 115 BSE. Yes or no? If he is not following 115 BSE, so from this, for first, wait. In your 373, what all incomes you took? Please pay attention first. Did you take salary? Yes, normal. Did you take PGB? Did you take house property? Normal. Did you take PGBP? Yes, this is also normal. Did you take short-term capital gain? Yes, this short-term capital gain was also normal. Yes or no? And did you take 80,000 rupees of dividend income? Yes, that is also normal. So entire total income is normal. There is no special income. Yes or no? So on this entire 373, normal rate is charged. Plus 72 if you will include. So on this entire 445, you are supposed to charge normal rate only. Up to 250, no tax. 250 to 5 lakh, no, 250 to 445, minus 250, 195. On 195, you are going to pay 5%. So the tax which you are going to calculate is tax 1 is 9750. Yes, sir. So this is your step number 1. In step number 2, you take your agricultural income and you include your basic exemption limit. See, if you would be following 115 BSE, then this 250 would not have come. This would have been 3 lakhs. And above also, you would have applied 115 BSE rates. Hello, sir. But are you following 115 BSE? No. Meaning that what we are doing, sir? We are following normal rates. So normal rates, the basic exemption limit is 250 only. Yes or no? Now, can you add 250 in 72? So 72,000 plus 2,50,000 will give you 3,22,000. So on this 3,22,000, now we are going to calculate the tax. So the tax will be 72,000 into 5% will give you 3,600. Now please pay attention. Step number 3. Tax on total income. It is tax 1 minus tax 2. you are going to get 6150. Will you less any rebate? The answer is yes. Because the assessee is individual, his total income is 373, which is less than 5 lakhs. Why we are checking 5 lakhs? Assessee is not following 115 BSc. So total income 5 lakhs or less, he is going to get the rebate. Yes or no? Rebate under section 87A. How much? Rebate will be 6150 or 12,500, whichever is lower. So 6150 will be allowed as a rebate. So the the tax on total income after rebate will be nil. Add what? Add health and education cess at the rate of 4%, that will be nil. Your gross tax liability will also be nil. And fortunately this time there is no TDS, TCS, advance tax, etc. So this will be your final income, final tax liability. 9750. How did you get it? Got it? Easy. If you don't do partial integration also, no, then also the answer will be same. Why, sir? See, partially integrated, no, so you were not thrown to 20% slab. You are still there in 5%. Even after including agricultural income, you are still remaining in 5% slab. So including agricultural income in your total income did not benefit the government. You still remain in 5% slab only. It would have been helped government to charge tax at 20% if the agriculture income would have been higher. Or your other total income would have been higher. Then you would have been thrown to 20% slab. Then it would have been a beneficial thing. Yes or no? So still if you will calculate the tax directly on 373, your answer will be 6150 only. Hello sir. But that does not mean that you are not going to do partial integration. You are supposed to do partial integration wherever it is applicable. Hello sir. Will you remember this thing? Sure sir. Perfect sir. Thank you sir. Number 2. Mark this question also important. Good question. Okay. Question number 2. Mr. Suhan submits the following details of his income for the assessment year 25-26. Income from salary given 3 lakhs. Loss from let out property. Do you have any other property? No. So this is your loss under the head house property, and in the second last line of the question they are saying that you are not following 115 BSc, meaning this loss can be adjusted against any head up to 2 lakhs. So your loss is not more than 2 lakhs. So the entire loss you can set off against any head. So you will try to set it off first against what? Salary. So this entire loss of 40,000 will be adjusted against your salary, and now your salary income will be 2,60,000. 2,60,000 will be your salary income. Yes or no? Now pay attention. And your house property head will be having a nil income. Sugar business income is there, and iron ore business there is a loss, and this loss is for previous year 1920. See, somewhere they are giving previous year, somewhere they are giving assessment year. Understanding or not? So this way they can play with you. So the loss is for 1920, previous year 1920, carried forward for the first time in which year? Previous year 2021, 21-22, 22-23, 23-24, and this is 5th year. In the 5th year the loss can come, business loss can come, yes, but in this year it will be adjusted only against your business income. So do you have a business income? Yes, but against that, if any other business loss is to be adjusted for current year, that you will adjust first. Any other loss of any other head has to be adjusted, then you will adjust that first. Only then this brought forward business loss will be adjusted from your current year's business income. So do you have any do you have current year depreciation? No. Do you have current year Capital expenditure on scientific research, family planning? No. Do you have any current year business loss which is to be adjusted against this? No. Do you have any other loss from other heads to be adjusted against this business income? No. Meaning that now this business income is available for set off of this business loss. Yes or no? So now this entire 1,20,000, if you want to adjust, you can. But for that, your income should also be 120 or more, no? Your income is only 50. So entire 50 will go, and how much? 70,000 loss will still remain. Can I say this 70,000 of loss can be carried forward to the 6th year, next year? Yes or no? So this will be carried forward as per section 72. Now short-term capital loss can be adjusted against long-term capital gains. Yes, entire long-term gain will go away. And still you will have 20,000 of short-term capital loss remaining. Now that will be carried forward as per section 74. That you can carry forward as per section 74. So this 20,000 of capital loss which could not be adjusted in this year, short-term capital loss, will be carried forward under section 74. Why did you carry forward, sir? This short-term capital loss cannot be adjusted against any other head now. Hello? It can be adjusted within the same head against short-term gain or long-term gain. There was only one long-term gain against which you have adjusted it. Now there is no other short-term gain or long-term gain. Yes or no? So this cannot be adjusted against any other income. It will be directly carried forward. Now, do you have dividend income? Yes, 5,000. Income from lottery winnings? Yes, 55,000. Winnings from card games? Yes, 6,000. Agriculture income? Yes, 20,000. This will be fully exempt, 10-1. And short-term capital loss, oh my god, you have another short-term capital loss of 10,000. Now see, this 20,000 remain short-term capital loss, this short-term capital loss remains, and this short-term capital loss also remains. Okay, now this will also be carried forward under section 74, because both the short-term capital losses cannot be adjusted because there are no short-term gain, no long-term gain. Yes or no? Next one, bank interest on FD. So under the head PGBP, how much income is remaining now? Nil. There is one loss of business 70,000 which will be carried forward. Under the head capital gains, how much income remaining? Nil. No capital gain income remains. Why? Because the entire long-term gain got adjusted against the short-term loss, and still short-term loss of 20,000 and short-term loss of 10,000 still remains. That will be carried forward to subsequent years. Yes or no? Do you have any other sources income? Yes, sir. You have other sources income: 5,000 dividend, 50,000 and 6,000 and 5,000. So 5,000 plus 50,000 plus 6,000 plus 20,000 plus 5,000, you are having 86,000. 86,000 rupees of what? IFOS. Now 86,000 plus 2,60,000, you will get 3,46,000. 3,46,000. Everyone getting it? Wait, somewhere I have committed a mistake or what? 20,000 carried forward, short-term capital loss. Short-term capital loss 60, long-term gain gone 40, 20, dividend 5. 5,000 dividend plus 50,000 income, winnings is 6,000. Agriculture income by mistakenly I have taken. Wait, agriculture income not to be taken. This is how much? 66 only, no? 61 plus 5,000. 66,000 only. By mistakenly I have taken agriculture income. Agriculture income is not to be taken. Okay, no? So this will be 3,26,000. Everyone got it? 326 GTI. Now is there any chapter 6 deduction? No. So this will be your total income. If I tell you to calculate tax liability, please pay attention. Now I will calculate the tax liability. Ready? How much tax liability you all are getting? 17, no. Wait now. Wait. Let me do. What is your total income? 3,26,000. Out of this, do you have winnings? Winnings how much? 50,000 plus 6,000. 56,000 winnings you are having, no? And balance total income. What is the balance total income? Come on, tell me. 3,26,000 minus 56,000, you are going to get 2,70,000. And my dear friends, are you following 115 BAC? No, question says that you are not following 115 BAC. Means you are going to apply the normal rates. Normal rates 2,50,000 up to 250 no tax, and 250 to 270 20,000. On that the tax will be 5%. So on 20,000 what will be the tax? 1,000. So tax amount here will be 1,000. And if you will do it, don't you think you are doing a blunder? Directly doing this. In the question, they are saying that 20,000 is your agricultural income. Now, even after having that, you are doing this type of calculation, everything will be wrong or not? Tell me. So, last question only we have done. See, to give you some hint that here you cannot do like this. So, what you are supposed to do? Ignore all these things. You are not supposed to calculate directly like this. First ask yourself, are you a resident individual? Yes. Are you an individual? Yes. Is your total income 326 more than your basic exemption limit? Yes. And are you earning net agriculture income more than 5,000? Yes. So partial integration is to be done. The moment agricultural income is there in the question and they are telling you to calculate the tax liability, please be careful that there will be partial integration in the question. Hello sir. See, there are no questions which tell you to calculate the tax liability, but still I am doing it. Why? Because in the later on questions, no, it is going to help you a lot. So right now only have that habit. Okay, no? So tell me, 3 lakh is your total income. In this, will you add your agricultural income of 20? Yes, add it. Now this will be 3 lakh 46,000. Now out of this 346, on 56,000 of winnings, you will apply 30%. And on the balance 2,90,000, you will apply 5%. Balance 2,90,000, no, you will apply normal rates. So normal rates if you will apply, first 2,50,000 no tax, 2,52,000, 2,52,000, 2,90,000, 40,000. On that you will apply 5%. That will give you tax of 2,000. Now you will get tax of 2,000. Yes or no? Earlier you were getting only 1,000. Why? Because the agriculture income was not included. Then no. Now do one thing. On this 56,000, calculate 30%. You are going to get 16,800. Add both of them. So your tax one you are getting now. This is 18,800. Friends, this is still your step 1. This is not your final tax. So step 2, take your agricultural income. Add your basic exemption limit 2,50,000 and 2,70,000. Now calculate the tax on 270. So this will be tax 2, and on 20,000 10% will be calculated. Sorry, 5% will be calculated. That will be 1,000. Yes or no? So tax 2 will be 1,000. Do you have tax 1? Do you have tax 2? Yes or no? So step 3 will be tax on total income, which is tax 1 minus tax 2. That will be 17,800. Everyone got this? Sure, sir. Will you get any rebate? Yes, because your total income is 3,26,000, which is less than 5 lakhs, no? So you are going to get rebate. So less rebate. Entire tax you can claim as rebate, or maximum 12,500, whichever is lower. Now 12,500 you are going to take as rebate. How much will be your tax? 5,300. How many of you got this correctly? Got it? Now pay attention. This is tax on TI after rebate. Now on this you will add health and education cess at the rate of 4%. So into 4% you are going to do 212. Okay, no? So you are going to get 5512. Done, sir. This was your gross total income. Are you earning winnings income this time? Yes. In the question, go and check. Winnings income is there. 56,000 on winnings. You are calculating tax also 30%. So don't you think that this 30%, this tax would have been deducted as TDS? No. TDS would have been deducted only on 50,000 because that was more than 10,000. The balance 6,000 is not more than 10,000. On that there was no TDS. Hello? Understanding? So if you want to reduce TDS from here, reduce TDS on winnings. Okay, no? But the TDS would have been deducted only on the 50,000 rupees of winnings because that was more than 10,000. The TDS would not have been deducted on 6,000 because that is less than 10,000. Yes or no? So what you are going to do? Less TDS on winnings. So how much was the winnings? 50,000 into 30% and 66,000 no TDS. So total winnings was 56. Out of that, on 50,000 only the 30% TDS would have been deducted, 15,000. Yes or no? So 15,000 plus no TDS will give you 15,000. So your total amount minus 15,000, it will be 9488 negative. Now you have to round off. Round off under section 288. So this will be 9490 negative. This will be your refund due. If you stop yourself at 5512, you will not get this marks. 1 mark will be deducted. 1 or 1.5. And this was your catch. 6,000 on that TDS was not deducted because that is less than 10,000. I have told you that TDS will be deducted only if the winnings is more than 10,000. So the person who is giving you 6,000 rupees of winnings, he is not going to deduct TDS because the winnings is only 6,000. Hello, sir. Understanding now? If that 56,000 entirely would have been given together, no, as one winnings, then on that entire 56,000 the TDS would have been deducted. Entire 56. But see, in the question 50,000 is separately given, 6,000 is separately given. Two separate winnings are there. On one winnings the TDS would have been deducted and on the second winnings the TDS would not have been deducted. Yes or no? Getting my point? Okay, this was your question number 2. How was this question? Good, no? Okay. The calculation, total income happens very easy, sir. But the tax liability calculation, we are, not that strong. So the thing in which you are not strong, you have to make that only strong, no? This is going to happen only. Now you are going to solve any type of questions on set off and carry forward. Few mistakes you will commit. And the moment you will see the answer, you will come to know, oh my god, this was a silly mistake. You will come to know that what mistake you are making. Okay? Now come. Question number 3. Question number 3. In the last line, they are saying that compute gross total income of Mr. Batra for the assessment year 25-26, assuming that he has exercised the option of shifting out, meaning he is not following 115 BSc. He is not following 115 BSc. Also determine the losses eligible for carry forward. Even if they are not telling, we are identifying and we are giving them the answer that these losses are carried forward. Now they are specifically asking that identify those losses which will be carried forward to the next year. Because in this question there are many losses which are going to get carried forward. Yes or no? Okay. So one by one, come on. Short term capital gain 140. Is it 111A or normal short term gain? Normal short term gain. Loss from speculative business 60,000. See, first of all, this 60,000, if I don't have any speculative business income, this will be carried forward as per section 73. So this is the first loss of this year which will be carried forward, because in the entire question, if you will see, there is no speculation business income. Hello sir. So speculation losses of this year cannot be set off against any business income or any other head. It will be directly carried forward. Okay. So now long-term capital gain on sale of land and long-term capital loss on sale of unlisted shares. So long-term can be set off against long-term, no? So this 30,000 will vanish, and out of this 1 lakh 70,000 will still remain. 70,000 loss will still remain. Now do you have any other long-term capital gain? The answer is no. So this 70,000 loss cannot be set off in this year against any short-term gain or any other head. So this 70,000, what you will do, sir? You will carry forward this under section 74. Yes or no, sir? Next one. Now income from business of textile after allowing current year depreciation. See, current year depreciation is already taken. Now what you are supposed to do? Current year capital expenditures. If not there, current year business loss. If not there, current year other losses. If not there, then brought forward business losses. Then brought forward unabsorbed depreciation. Yes or no? So, do you have loss from business of textile? Adjustment number 2. Loss from textile business 60,000. Loss pertains to assessment year. Be very careful now. Very careful. Assessment year 17-18. Means previous year 16-17 loss. Wait, loss happened in previous year 16-17. Can you bring that loss to 24-25? Count. Previous year 17-18 will be the first year. 18-19, 19-20, 20-21, 21-22, 22-23, 23-24. Last year. Can it come to the 8th year? Yes, you are bringing that loss to the 8th year. Yes or no? Now, if you have any other business loss which you have brought forward, don't set off that loss first. Set off this loss first, because this is the last year. Ayo. Can it be set off against any other income of this year? No. It can be set off against this year's business income. Do you have business income? Do you have business income? Yes, 50,000 you have. Against this current year losses are not set off. So you will directly bring this loss to be set off against this. So this entire 50,000 will vanish. And don't you think out of this still 10,000 will remain? Now tell me. Do you have any other business income? So can this 10,000 be adjusted against any other income? No. So this will be carried forward. This was the last year. And if this cannot be set off in this year, it will not go to the next year. This will lapse. Understanding? So it will lapse. Since 8th year, 24-25 is 8th year. So in this year, to the extent of 50, it will be set off, and the balance 10,000 which will remain, that will not be set off, that will lapse. Okay, sir? Now, do you have income from activity of owning and maintaining resource? Yes, but you have a loss also of that activity. Loss is for which assessment year? Please be very careful here also. Assessment year 22-23 means previous year 21-22. So loss of previous year 21-22 will come in previous year 22-23, previous year 23-24, previous year 24-25. Third year it will come. If it is not getting set off, it will be carried forward for the next year, 4th year, and that will be the last year. Yes or no? So can it be set off against this income? Yes. Entire income will vanish and still 10,000 will remain. Now this 10,000 will be carried forward to the next year as per section 74A. it will be carried forward. Unlike your business loss, it will not lapse. It will be carried forward for the next year, fourth year. Okay, sir. Now, income from salary already computed. Loss from house property. Can you set off this loss? Yes. 40,000 you can set off against salary. So, your salary will remain 60,000. Yes or no, sir? So, now tell me. Have you done the entire thing? Yes. Now, first of all, tell me the salary. Income from salary. Taxable 60,000. Income from house property. Nil. Do you have any PGBP income remaining? No. Nil PGBP. Do you have any capital gain remaining? No, sir. No. Capital gain I have no. 1,40,000. First capital gain, see 1,40,000 I have. So 1,40,000 capital gain will remain. Short term capital gain. Do you have IFOS remaining? No. So entire things you have done. Now 2 lakh rupees finally will be your total income. Easy or difficult? See, these type of questions they will ask in the exam. Okay. And this was, if I'm not wrong, this was your exam question only. How many marks you know? 8 marks. Just imagine. You just have to present it. Simple. If you are reducing from the head, loss you are reducing from the head, you will write interhead set off of this loss. If you are reducing within the head, you will write what intersource set off. Okay, if you are setting off the brought forward loss, you will write down less set off of brought forward loss. That's it, very simple. If you will see the answers also now, you will come to know that these type of questions, if they are asking in the exam, meaning that they are trying to give you the, give you the opportunity to pass in the exam. 6 to 8 marks, you will easily score in these kind of questions. And these kind of questions are asked in the exam and people are not solving. Just imagine. How would a teacher like me feel? Okay, even after teaching so well, you are not able to attempt these kind of questions. So lack of practice, you are not supposed to go lack of practice. See, we are solving each and every question of ICA study mat in the class itself. Now permutation combinations will be made from these questions only. There is nothing which will come from outside. It will come from here only. Okay, let's do. Are you finding it difficult or it is easy? Understanding, no? Only the tax liability calculation you have to be very careful. Okay, come to question number 4. Now this question number 4, no? In this question number 4, there is a fundamental error which I'll tell you. The institute has created one error. I'll tell you where is that error. Okay. See. Error is in this assessment year. In your textbook, no? This assessment year should be, this assessment year should not be 25-26. This assessment year should be 24-25. 24-25. So please rectify this in your textbooks. This should be assessment year 24-25. Because looking at the solution now, sure that the assessment year is 24-25 only. Okay, no? We'll discuss. Don't worry. Now this question is a good question. You can expect such kind of questions in the exams. Okay. Now Mr. A furnishes you the following information for the year ended 31st March 2025. What information? Income from plying of vehicles computed as per books. Okay. So this income is computed as per books, meaning that normal PGBP income. Computed as per books means this is PGBP income calculated as per normal provisions. So this is your normal PGBP income. Yes or no? So he owned 5 light goods vehicle throughout the year. Wait, if you are a transporter who is the owner of 10 or less transport vehicles, goods carriages, so for you 44 AE becomes applicable, and as per 44 AE you can show presumptive income 7,500 per month or a higher sum for every month of your ownership. Hello sir. Or even part of the month of ownership of those vehicles during the previous year. Right? No. So you show 7,500 per month or part of the month's ownership as your PGBP income on a presumptive basis. So on presumptive basis also you can show. is this 3 lakh 20 presumptive or a normal PGBP income? Normal PGBP. See, this is your normal PGBP income, normally calculated. So if you follow 44AE and calculate the income on presumptive basis, so what will be your presumptive PGBP income? Can you please tell me? 7,500 per month per vehicle. Hello sir. Multiplied by number of vehicles, 5 vehicles, multiplied by number of months ownership. So for how many months the vehicles were owned? 12 months. So can I say minimum 4,50,000 or a higher sum I will have to show as my presumptive income? But wait, do I have the option to show lower profits? Do I have the option to show lower profits under 44A? If I don't want to show 4,50,000, minimum this much, presumptive income I don't want to show. If I want to show a lower amount of profit, can I do that? Yes. But for that, I will have to separately maintain the books of this business and get them audited. I can do it. Hello, sir. I can do it now. So for my presumptive, for my transport business, I am not going to show 4,50,000 because if I am going to show 4,50,000, I will have to pay more tax, no? If my normal PGBP income calculated as per normal provisions is 3,20,000 only, I am not going to pay tax on 450, I am going to pay tax on 320 only. You want me to maintain the books? No, I will maintain the books separately for this business. And you want to get the books audited? I will get them audited also. Hello, sir. But I will show 3,20,000 only. Will you remember this? We have done this thing in PGBP also. Right now? Now tell me. You have income from retail trade of garments. Okay. Retail trade. Are you an individual? Come on, tell me. Are you an individual, Mr. A? Yes. If you are doing any business other than specified professions, those 11 professions, do you remember? Doctor, lawyer, etc. So you are not doing any specified profession. You are not doing any transport business. This is not your transport business. This is not your transport business. Okay. And number 3, this is not your commission or brokerage business. This is not your agency business. Any other business is there. For any other business, if the turnover is not more than 2 crores, then on that turnover you can calculate 8% and minimum 8% you can show as a presumptive income. Tell me yes or no. So is it an eligible business, this retail trade of garments? Is it an eligible business? Yes, because its turnover is less than 2 crores. So on this turnover, minimum 8% presumptive income I can show as per 44 AD. But do you remember, out of this turnover, whatever turnover if I will receive in this year or on or before the due date of filing my ROI for this year, whatever turnover I will receive by prescribed modes, for that turnover I can show 6% also. Hello, sir. Do you remember something like that we did in 44 AB or 44 AD? So on the entire turnover you are supposed to, show how much? On the entire turnover you are supposed to show 8%. Turnover should be 2 crores or less. Don't talk about 3 crores right now. To take that 3 crores, this year's receipt, out of that 5% or less should be in cash. As well as 5% or less payments should be in cash. Both should be satisfied. Hello, sir. Then I can take what? 3 crores, no? Otherwise 2 crores is limit. Now if you will see, no, here, out of the 1 crore 35 lakh 70,000, he is receiving 10%. See, 10% of the turnover was received in cash and balance through account pay check. So for him, definitely the limit of 3 crores is not applicable. Limit of 2 crores is only applicable. Hello, sir. And is his turnover within the limit of 2 crores? Yes. So he can show 8% of the turnover. But wait. entire turnover he will not show 8%, he will show the 8% of only this 10%. Remaining turnover he is receiving in prescribed modes only, no? So for that he can show 6%. Hello sir. So tell me, out of 1 crore 35 lakh 70,000, 10% which he is receiving in cash, for that 10% he has to show 8%. Hello. And the remaining 90% which he is receiving by prescribed modes, for that 90% turnover he has to show how much? 6% also will be sufficient. Done, no sir? So do one thing, 1 crore 35 lakh 70,000 into 10%, you will get 13 lakh 57,000. For this turnover you are supposed to show 8%. Yes or no? So show 8% will be 1 lakh 8,560. Are you getting 1 lakh 8,560? What is the balance turnover? 1 crore 35 lakh 70,000 into 90%. This is 1 crore 22 lakh 13,000. For this turnover he is supposed to show only 6%. Yes or no? Into 6%, that will be 732 780. Yes sir. Plus 108,560. So total is, if he is showing his profits as per 44 AD, he will have to at least show 8,41,340. Yes or no? So for him, the turnover limit will not be 3 crore, turnover limit will be 2 crore only. And his turnover is within the range of 2 crores. Yes or no? Hello sir. Now tell me now. First time he followed 44 AD, not in this year, last year. See, assessment year we have changed. So last year he followed 44 AD for the first time. For the next 5 years he has to follow 44 AD. Now in this year he has to compulsorily show this much or a higher sum. Yes or no? But what he did, he calculated his his income as per books. Normal PGBP income when he calculated, no, it came to 7,50,000. So tell me, does he have the option in this year to show lower profits? See, if his turnover is 2 crores or less, so when you first time he followed in which year, sir? Previous year 23-24. Meaning assessment year 24-25 is this only. Hello? Assessment year 24-25 is this only. Previous year 23-24, he followed the 44 AD for the first time. So for the next 5 years, meaning previous year 24-25, 25-26, 26-27, 27-28, 28-29. In all these 5 years, he has to follow 44 AD only, no? So can I say 24-25 in this year also his turnover is less than equal to 2 crores only. How much is your turnover? 1 crore 35 lakh 70,000. Hello? On this turnover, 44 AD if he is showing how much? 8,41,340 should come. Minimum this much amount he has to show as his PGBP income in this year. But what he did? He calculated his normal profits. So normal profits were only 7,50,000. So tell me, once you follow, next 5 years you have to follow. But in next 5 years, if in any year, if you want to show less, can you show less? Yes, you can show less. In 24-25 itself, can you show normal profits of 350? Yes. But now remember, for the next 5 years, you cannot again come in 44 AD. And this year, if your total income is more than basic exemption limit, for this year, you have to compulsorily maintain the books and get them audited also. Hello, for you the tax audit limit will now be 1 crore and not 2 crores. If you would have followed 44 AD, then 2 crores limit. Up to 2 crores, show your profit and no need to get the books audited and get them, no need to maintain the books and get them audited. But are you following 44AD? No, 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 no. You are not following 44AD. So definitely you are going to show less income. Hello. Meaning that for you that 2 crores limit for maintaining books and getting them audited is automatically not applicable. Yes or no? So for you now, your tax audit limit is 1 crore. So tax audit limit was 10 crores also. But that 10 crores you can follow if 5% or less receipts are in cash, as well as 5% or less payments are in cash, only then you can follow 10%. 10 crore limit. That 10 crore limit will not also be applicable for you. Why, sir? Why? Because this year, out of your turnover, 10% you are receiving in cash. That is more than 5%. No. Forget about the payments. All the payments you are doing by way of prescribed modes. See, it is given in the question also. All the payments you are doing in account paycheck. Can you see? So even if you are making all the payments by account paycheck, but since this year your receipts, out of your receipts, more than 5% receipts are in cash. So the 10 crore limit of tax audit will not be applicable. For you, the tax audit limit will be 1 crore only. Hello? Now tell me, is your turnover more than 1 crore? Yes. Are you following 44AD? No. So if you would have followed 44AD, even if your turnover was more than 1 crore, books were not required for audit and no, books were not required to be maintained and no audit was required. But are you following 44AD? No. Definitely I am going to show 7 lakh 50 only, no? Why would I pay tax on more amount, 8 lakh 41? Understanding or not, first of all tell me. So, for the second business also, you are going to show how much? The normal income, this one. And for the first business also, you are going to show normal income. Yes or no? Now, for the first business, compulsorily books needs to be maintained and get them audited. For the second business, books will be required to be maintained because your turnover is more than 1 crore. And for you, 10 crore turnover cannot be taken. Getting my point? Your turnover is more than 1 crore and you are not following 44AD. You are showing lower profits, and this year your total income is also more than your basic exemption limit. Meaning that compulsory now in this year you are supposed to follow what? Maintain the books for this business separately and get them audited also. Done, sir. Now see, now what will happen, no? This is normal business profits, So from normal business profits, no, what you can do, if earlier years unabsorbed depreciation you have brought in this year. So don't you think unabsorbed depreciation is adjusted as per section 32? So can you take 32, 37, 1 deductions while calculating your normal PGBP income? Yes. So your normal PGBP income which you have calculated 3 lakh 20 and 7 lakh 50, out of that you can take the deduction from 30 to 37 1, including the unabsorbed depreciation can be adjusted. Hello sir. But wait, if for these businesses you would have shown the profits as per presumptive provisions, you would have shown 4 lakh 50, you would have shown 8 lakh 41 340. Yes or no? All the deductions from 30 to 37 1 assumed that you have claimed and we have allowed. Unabsorbed depreciation is as per 32 only. Will it be allowed separately? No. So in that case you are not eligible to claim that set off of unabsorbed depreciation. Getting my point? So that would have been a loss for you, no? Definitely the incomes were higher only. And also the unabsorbed depreciation was not allowed for set off. Because that is allowed as a set off. Not as per 70 to 80 provision. That is allowed as a set off as per 32 provision. And 32 comes between the range of 70 to 37 1. All the deductions from 30 to 70, 37 1 you have claimed and we have allowed. It is assumed and the presumptive income is there. So from this presumptive income you cannot take the deduction or set off of unabsorbed depreciation because that is as per section 32. So that 1 lakh you would not have been able to claim only. Getting my point? from neither of the business incomes if you would have shown them on presumptive basis. So what is the best thing you can do now? Show both the profits as per normal provisions. Yes or no? And if you are claiming both the profits as per normal provisions, all the deductions which are available, including the unabsorbed depreciation set off as per 32(2), you can do it, no? So do you have any unabsorbed depreciation? Yes, 1 lakh rupees. Can you see 1 lakh rupees? Now this is for the assessment year 23-24. This you can carry forward for indefinite year. So it is easily coming in this year. It can be set off against your business incomes. So now you will show business income how much? Come on, tell me. 3,20,000 normal business income you will show for your transport business, normal business income, because that is lower than 44A. You are not going to show 44A, you know. And how much you are going to show for your normal retail trade business? You are going to show 7,50,000. Both the incomes you are going to show as per normal provisions. Now out of this business incomes, can you claim unabsorbed depreciation of 1 lakh? Yes, absolutely you can do. But if you would have followed this presumptive basis, then that 1 lakh was not available as a set off. Will you remember this? So now do the total, do the needful. 9,70,000 should have been your total income. Just imagine how much complications they are creating in one question. It appears to be very easy, but what is to be done, bloody, we don't know only. Now they are telling, compute the taxable income of Mr. A and his tax liability also you are supposed to calculate. For the assessment year 25-26 with reasons for your computation, assuming that he exercised the option of shifting out. Okay, if he is exercising the option of shifting out, then 115 BSC, followed or not followed? Not followed. Now the tax rates will be normal tax rates. Apply the normal tax rate on the entire 9,70,000 because entire 970 is your normal income only. Hello sir. So tell me, first 2,50,000, no tax. 250 to 5 lakh, 12,500. So nil plus 12,500 plus what? 5 lakh to 9,70,000 on that 470, 20% tax. So 470 into 20% will be 94,000. Now can you calculate 12,500? 1,06,500. Okay, on that apply 4% now directly. No need to claim any rebate, no need to give any surcharge because the total income is more than 5 lakhs and the total income is not more than 50. So no surcharge, no rebate. Apply 4%. So 1,06,500 into 4%, 4260, 1,10,760. This should be your tax liability. And if you would have shown for any business, you would have shown what? Higher profits, no? As per presumptive provisions. So your total income would have been definitely higher and this tax would have also have been higher. As a chartered accountant, you are supposed to reduce the tax liability of your client, no? Or increase it? Reduce. How will you reduce? By allowing him to take the maximum benefits which he can take. We'll tell the client that, see, we'll show the presumptive incomes. We are going to pay more tax because the total income will be more. And plus the unabsorbed depreciation 1 lakh also there, no? We will not get the set off of that. So do one thing for both the businesses, since the profits are lower, no? We'll calculate normal PGBP income, will not show presumptive income, and the total income will be 970 only. And for that, we'll get the 1 lakh rupees of unabsorbed depreciation set off also. And ultimately our tax liability will be 1,10,760 only. In any other option, no, it would have been higher only. See, if you would have followed 320 here and 8,41,340. So 320 plus 8,41,340 still would have been, 1 minute, 3,20,000 plus 841,340. Still it would have been 11,61,340. And even if you would have taken the unabsorbed depreciation from 320, no? So still it would have been 10,61,340. So from 320, you take what? 1 lakh. Because that is normal. From that 1 lakh you can reduce. So that will become 220. That 220 and 8,41,000. Still it will be 10,61,340. More than 970. Hello sir. Now do one thing. Don't take that 320, take it 4,50,000 presumptive income. Hello? Take that presumptive income, and for this normal business, take 750. So that 4,50,000 plus 7,50,000 would have been still 12 lakhs. And out of that, if you would have taken 1 lakh from the normal business, no. So that 750 minus 1 lakh would have been 650. Still it would have been 11 lakhs. Still it would have been more than 970. So the best option is what? For both the businesses, claim normal profits only. Sure, no? So what I have done here, sir, see your transport business, no? Transport business and retail business, see, both normal you have taken. Normal is 320 and 750. Okay. What if for this you would have taken 44A? It would have been 450. Hello, sir. And it would have been 750. You would have taken normal only. What if you would have taken here 8,41,340 and here you would have taken 3,20,000? Getting my point? So 1 lakh would have been allowed from here, sir. Sir. 1 lakh would have been allowed from here. So this would have been 650. 1 lakh would have been allowed from here. So this would have been 2,20,000. So still pay attention. 6,50,000 plus 4,50,000, it would have been 11 lakhs. And 2,20,000 plus 8,41,340, this would have been 10,61,340. Both the incomes would have been higher than this, 9,70,000. Getting my point? Hence we did not take these two. Forget about showing presumptive profits for both the businesses. If you do that, you are one of the weirdest person. If you are showing what? Both the profits as per presumptive. If you are following both the profits as per presumptive, meaning you are showing 450 here for transport business and 8,41,340 for your retail business. So your entire income, from none of the business income you would have got what? That 1 lakh rupees. Getting my point? So your income would have been highest in this case. 4,50,000 plus 8,41,340. 12,91,340. Even though doing this would have been a little bit more sensible. But we are not doing that also. Just imagine. If we can pay tax on 970, then why to bloody pay tax on 1061,340? If we can pay tax on 1061,340, why to pay tax on 11? If we can pay tax on 11, then why to pay tax on 12,91,340? Am I a mad person or what? So out of all these four options, which is the best option? Compute total income as per that option. Calculate the tax liability as per that option, which we have done. Hello, sir. Will you remember? How was this question? Interesting, no? Just 2 or 3 information and just see how interesting this question became. The question is not interesting. The person is interesting, making the question interesting. Hello, sir. Say thank you. Okay. So, now, question number 5. Question number 5. Very easy question. See, I have solved the question in front of you. Okay. Should I discuss? We'll discuss and finish. Okay, no? Come on. Mr. Aditya furnishes the following details for the year ended 31st March 2025. Loss from speculative business A, income from speculative business B. Can be adjusted from each other? Yes. So, if you adjust 5,000 from, if you adjust 25,000 from 5,000, still 20,000 will remain. Now, that speculation loss, you cannot set off. That speculation loss you cannot set off against any income, any business income or no other income. So that will be directly carried forward. Yes or no? Now, loss from specified business covered under 35D. There is no specified business profits. So directly carry forward this specified business loss. Hello, sir. Next one. Income from salary computed. Okay. Loss from let out property. Okay. So your loss from let out property is 2,50,000. Can it be set off against all the heads up to 2 lakhs? Yes. But for that you have to see that you are not following 115 BSc. See, are you following 115 BSc? Read the last line, second last line. You are not following 115 BSc. Meaning that this house property loss you can set off against any head, but to the extent of maximum 2 lakhs. So 2,50,000 was your loss. Can you set it off against your salary? Yes. Set off against the salary. Still 1 lakh rupees of salary will remain and 50,000 rupees of this house property loss will remain, which you cannot set off against any other head. Now this will be carried forward. Hello sir. The entire thing which I am speaking is in front of you. Do the same things which I have done. Hello sir. Next one. Long-term capital gain, income from trading business, that is 45,000. Okay. Now you have long-term capital gain on sale of urban land. You have long-term capital loss on sale of shares. Can you set off your long-term loss against long-term gain? Yes. So first 75,000 will be adjusted out of 2 lakh. Still your long-term gain will remain 1,25,000. Yes or no? Now long-term capital loss on sale of listed shares. So this is also a loss. Can this loss be still adjusted against that 1,25,000? Yes, adjust that long-term loss against long-term gain. You don't have to see what type of under which section the gain was calculated. Long-term loss, any capital asset can be set off against long-term gain of any capital asset. Yes or no? So set off, you will get 23,000 long-term gain remaining. Now do you have 23,000 long-term gain remaining? Yes. Do you have income from trading business? Yes, 45,000. Yes or no? Now see, loss from owning and maintaining race horses pertaining to the assessment year 23-24. This year, do you have any income from activity of owning and maintaining race horse? No. So this loss will not be set off in this year against any income. This will be directly carried forward. Hello sir. Hello sir. Now, do you have a brought forward loss from trading business 5,000? Yes. Now that loss you are bringing forward in this year against your business income. See, you have 45,000 business income. No, against that this loss will be set off. Now your business income remaining will be only 40,000 and this loss is gone, vanished. Okay. And both the losses are coming in this year. They are not time barred. Okay, no. Both are coming in this year, and if they are not getting adjusted in this year, they are going to get carried forward in the next year. Okay. Hello sir. Now tell me, do you have salary? Yes, only 1 lakh remaining. House property entire gone. 50,000 loss carried forward. Do you have PGBP? Yes, 40,000 PGBP. There is any loss for PGBP which is carried forward? Yes sir, 2 losses. Speculation loss 20,000 will be carried forward and specified business loss 20,000 will be carried forward. Hello sir, no business loss remaining, normal business loss remaining. Okay sir, last year normal loss, past years normal loss is already set off against this year's PGBP income. Getting my point? So now the PGBP income taxable will be 40,000. Done? Do you have a capital gain income? Yes, you have 23,000 rupees of capital gain income remaining. That is a long-term capital gain under section 112. Okay, sir. Now, do you have any other sources income? No. Add all of them, you are getting 1,63,000. That is your total income. Done? Now, what all losses can be carried forward? 20,000 speculation business loss, 20,000 specified business loss, 2,000 will be lost from an activity of owning and maintaining racehorse. These 3 losses can be carried forward to subsequent years. Yes or no, sir? Any other loss can be carried forward? No. This 50,000 loss of house property, that will also be carried forward. Write down there only. 50,000 house property loss can be carried forward. 4 losses will be carried forward to subsequent years. Done, sir? Mark this question important, exam question. How many marks you know? Yes. Just imagine these kind of questions. The amounts were not exactly same. Amounts were a little bit different, but the same type of question came. Okay. Now pay attention. 6th question. Good question. This is also a good question. Mr. Garg, a resident individual, furnishes the following particulars of his income and other details for the previous year 24-25. Income from salary computed given. Income from business given 66,000. Long-term capital gain on sale of land 10,800. Okay, 10,800 is LTCG. Loss on maintenance of resources, directly carry forward, because this year you don't have any such income, so this will not be set off against any other income of this year. Directly carry forward. Loss from gambling, what you will do? IGNORE, no set off, no carry forward allowed, directly ignore. So 15,000 will be carried forward and 9,100 will be ignored. Okay. Now they are saying the other details of unabsorbed depreciation and brought forward losses pertaining to the assessment year 24-25 are as follows. Assessment year 24-25 meaning last year only, previous year 23-24. These are the losses for the last year only. Now they are brought forward in this year. Okay. Unabsorbed depreciation in this year, no. Do one thing, adjust your unabsorbed depreciation in the end. Have this habit of adjusting unabsorbed depreciation in the end. After you complete everything, no, then only adjust unabsorbed depreciation. Yes or no? Now, loss from speculative business. Do you have any speculative business income this year? If you would have any speculative business income this year, then this loss would have been set off in this year. So this loss will be carried forward to the next year. Next year will be the second year of carry forward. Yes or no? Next one. Do you have a short-term capital loss? 9,800. Yes. You have brought forward this short-term capital loss in this year. Can it be set off against this year's short-term gain? Yes. But do you have any short-term gain? No. Can it be set off against this year's long-term gain? Yes. Do you have any long-term gain? Yes. 10,800. You have no. Against that 10,800, set off this 9,800. So now the long-term gain remaining will only be 1,000. Hello, sir. Now the last thing is unabsorbed depreciation. Do you have unabsorbed depreciation? Yes. Can you carry forward? Yes. After carry forwards, it can be set off against business income or any other income except salary. So do you have business income this year? If brought forward business loss was there, no, that was supposed to be set off first and then unabsorbed depreciation. Fortunately, we don't have any brought forward business loss, so we can definitely set off the unabsorbed depreciation from our business income, which was how much? 66. Out of that if I set off how much? 11,000. Okay, but wait. Out of that, if I set off 11,000, so balance 55 will remain. But wait, what I have done, you know? Can I set off the unabsorbed depreciation against my any income? Against any income can I set off? So I will always try to reduce my that income on which I have to pay tax at special rates. See, business income is taxable at normal rates, no? Hello, sir. Business income is taxable at what rates? Normal rates. And if I set off the entire unabsorbed depreciation against my business income, what will happen? I am reducing my normal rate income. For that I get 2,50,000 basic exemption also. But if this loss can be adjusted against long-term gain, which is taxable at flat rate of 20%, 12.5%, no basic exemption limit also available from there. So I would first try to reduce that income, no. So if given an opportunity, always adjust it against those incomes which are chargeable at special rates, like long-term gain, short-term gain and all. Getting my point? So do you have 1,000 rupees of long-term gain? Yes. Adjust 1,000 out of this against long-term gain. Now unabsorbed depreciation 10,000 remaining. Now this 10,000 you can adjust from business income. Now your business income will remain 56,000. Hello, sir. Everyone got it? Now somebody would have adjusted the entire 11,000 out of business income. Then also the answer is correct. No problem. But my logic is, if you can adjust it against any income and there is no preference given, there is nothing mentioned that you have to first adjust it against your business income only, then why would I adjust it against business income first? I would definitely adjust it against that income which is taxable at flat rate to save my those taxes, because from those incomes I don't get any basic exemption limit. Getting my point? And on those incomes flat rate of tax is payable. So always try to do the set off in the best possible manner which can give you the maximum possible benefit, but within the four corners of the law itself. Okay, no? Hello, sir. Not beyond law. Okay, so tell me, 15,000, what is remaining? 15,000 salary remaining? Yes, sir. 15,000 salary remaining now. House property nil. Now your PGVP remains 56 only, not 55, 56. And no capital gain remains. 1,000 capital gain will not remain. If 1,000 capital gain remains, then the business income will be 55. Hello. And if no capital gain remains, because unabsorbed depreciation to the extent of 1,000 you have adjusted like me, hello, then your business income remaining will not be 55, it will be 56 only. Done, sir. Total income will be 71 in both the cases. Whether you do as per your thing and whether you do as per my thing, it will be 71 only. And these losses will be carried forward. Done, sir? Sure, sir? Okay. Now do one thing. Question number 7, 8, 9 and 10. These 3 questions you are going to do at home today. Homework. Don't worry, I'm going to discuss all of them, but in tomorrow's session. Okay. So tomorrow when we'll meet, I'm going to discuss these 3 questions properly, but you are going to solve these 3 questions at home. Okay. And tomorrow, after we are through with this, I'm going to start with clubbing and we'll end the clubbing tomorrow. Today, set off is over only. Now only these 3 questions are remaining to be discussed. Once these 3 questions are done, we are done with, set off. All the difficult questions we have already solved. Understanding or not? So tomorrow these 3 questions once I'll discuss, then I'll immediately start with the clubbing, and clubbing will also be over tomorrow itself. Okay. So see you tomorrow, same time. Bye bye.